Welcome to the European Market Open, everyone. It's December, Tom. A minute to go into the start of cash equity trading in Francine Lacqua in London with Tom McKenzie.
And here are your headlines. Weaker variant. Beijing allows some patients to isolate at home after a top official says the country is entering a new stage in its fight against the pandemic, indicating a softer stance on lockdowns. Shifting gears, Fed Chair Jay Powell signals the central bank is ready to downshift its tightening pace with a 50 basis point move this month. Global equities rally. And close to nothing, FTX's founder claims the crypto empire's fall wiped out nearly his entire fortune while apologizing for the company's collapse.
Now, Tom, let's take a look at the futures. For the moment, they're gaining some, well, actually 1% almost for the DAX futures, 0.1% for the FTSE. It's all about China softening their stance on COVID, and then Jay Powell saying maybe they'll raise less than expected.
Yeah, two key factors for these markets, as you suggest, China and Jay Powell, not pushing back on those loosening of financial conditions. In his commentary yesterday, he did suggest that 50 basis points is very much in place. Certainly, that's what the markets are now pricing in for the month of December. But he did reiterate he does expect rates to be higher for longer. But so far, markets looking through that. You saw rip-roaring gains over in the US yesterday. The Nasdaq ending up more than 4%, the S&P up more than 3%. Here in Europe, the gains then being reflected, the handover from the US to Asia. Another strong session there. The Spanish IBEX is currently up 0.7%. The CAC current gaining 46 points. Here in the UK, the FTSE 100 up 0.2%. Let's switch it over and see how things are reflecting across assets. We'll just moderate, or at least meditate, on what happened in Asia and what continues to happen. The market continues to trade there. The benchmark currently gaining 1.6%. Again, the gains in the month of November, as we look now, the first day of December, have been significant for the Asian session on the mainland, but also in Hong Kong. That continues. Again, the reiteration from some officials, or at least the adjustment of the rhetoric around COVID, but then those concrete measures around easing some of those lockdown restrictions for those infected, quarantining at home in Beijing. That is significant, if incremental. Future stateside pointing flat, essentially, after the very solid gains of yesterday. Maybe a little profit taking will come through in the session. The US 10-year 362, after a significant move down in yields yesterday, you're losing or looking at a tick up just of around 2 basis points for the benchmark. And the yen marked gains here at a 3-month high, 136 for the Japanese yen, gaining 1% in session today, just as that rate differential between the BOJ and the Fed starts to come in slightly. You are seeing some solid gains for the Japanese currency, again at 3-month high. For the context, the dollar down around 6% in the last month. Let's switch it over and have a look at what is happening in the mining sector. We just want to briefly touch on this, given what's happening with iron ore and copper. That tying into that China story, the expectations maybe going to get more demand as lockdowns, at least incrementally, start to ease, and the rhetoric has shifted, and that is significant in China. So a couple of these miners, just to point out, of course, most listed, if not all listed here in the UK. Just a modest gain for BHP of 0.2%, downside for Glencore of 0.4, and a little bit more gains when it comes to Rio Tinto, of course, a big producer of iron ore, currently up 0.7%. Francine.
So, Tom, if we dig a little deeper into the sectors, this is what we're seeing overall. Now, we do have some individual stocks that are actually on the downside, but if you look at the overall indices, 18 of them are gaining. I'm looking at real estate gaining 3% almost, technology, financial services gaining between 2 and 2.5%, and then energy is really the only one where we're seeing a little bit of pressure. Energy as a sector overall in Europe down 0.4%. Now, let's also get over to our Bloomberg MLive managing editor. He is Mark Cudmore. And Mark, you're looking at U.S. data from yesterday after we had that Powell speech.
Yes, absolutely, Fran. I think we're a little bit distracted by Powell's speech because he really said nothing new. He kind of delivered exactly in line. The data out of the US yesterday was super interesting. So let me bring two key data points that we got. One was the JOLTS. Now, this is a chart of JOLTS to unemployed. What's JOLTS? It's job openings. So job openings relative to unemployed. This is going back over the last 20 years. In the mid-2000s, the idea that there might be more than one job opening for every unemployed person was just considered mind-boggling. It was like, well, unleash inflation like never seen before. Well, finally we got that in 2018, and recently we got above two job openings for every unemployed person. And of course, we do have an inflation like not seen for 40 years. It is starting to come down, but note, it's still beating forecast. It was higher than expected, and it has a long, long way to come down. It will come down very rapidly. This is the data back for October. Ultimately, we need this ratio to come way below 1, maybe back down to a half. There's more than 10 million job openings in the US. We probably need 5 million of those job openings to disappear. Note, that's not jobs where people are hired, job openings. So Powell said that the job market is still too tight for him to be able to cut rates next year, and this chart is saying that's absolutely the case. However, there's one other key bit of data yesterday, and that was the PMI data. Let me show you the next chart here. Chicago PMI was just a horrible number, 37.2. Now, my colleague Cameron Christ pointed out, in the 55-year history of this data, it's never been below 40 without there being a coincident recession in the US. It's either been during the middle of the recession or on the way out. So we're going to get a recession in the US, we know this, but it's a chart like this, and look how quickly it's dropped, that makes me wonder whether the recession might come earlier than I think. I've been in the camp it doesn't come until second quarter next year, and people have been too bearish in the US economy. But it's a chart like this that makes me think maybe the error is that it might come even earlier than I expect, because the US economy is slowing rapidly from a strong base.
Mark, as always, thank you so much. Great chart, and of course, great analysis. Our Bloomberg MLive editor, Mark Cudmore. Now, Fed Chair Jay Powell cemented expectations of a deceleration in tightening starting with the December hike. He also presented a case for achieving lower inflation without tipping the economy into a deep recession.
For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. We anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, it is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy. Despite some promising developments, we have a long way to go in restoring price stability.
Well, investors welcome the shift with stocks rallying and bond yields falling. Now joining us is Alan Higgins. He's Chief Investment Officer at Coutts. And Tom, one of the things we were talking about, of course, with Mark Cudmore is the fact that Jay Powell pretty much did as expected, right? There was no breaking news. Did you look at the data instead, Alan?
Yeah, thanks for having me, by the way. Yeah, it was a bit of a surprise because, 50 basis points absolutely discounted, right? But I suppose it goes to show, Mark talked about this recession as inevitable. You know, it's the most discounted recession I've seen in my career, probably outside of COVID, of course, the COVID recession. And maybe that's what's going on here is the fact, I think you've got your own recession indicator at 100%, right? The Bloomberg indicator, for example. And on the buy side, everyone expects recession, including ourselves. And therefore, you've got to be a little bit careful this time in terms of asset allocation because it's so widely expected. And yesterday is just an example of that.
And yet Goldman Sachs says the chance of a recession in the US is only 35%. Powell himself suggested that there is still a landing where you get a soft landing. There is still a window open for that. And you push back against that. But in terms of, were you surprised that he didn't push back against the loosening of financial conditions? Because we know they're concerned about that. And yet he had this opportunity, he didn't take it.
Yeah, very good point, Tom, because previously he did push back against the loosening of financial conditions. Essentially, he pushed back against the equity market rally, the credit rally. He didn't this time, which was interesting. I mean, going back to the soft landing, it's a pretty narrow path. I saw it when I was a very young bond manager in 1994. The Fed raised rates from 3 to 6. PMIs, I mean, Mark can have a look. The PMIs went to 45. 1995, no recession. What happened? This is kind of the danger of no recession. That year, 1995, the S&P was up 37%. So, you know, yesterday explains a bit. It's very, very dangerous. One, notwithstanding your 100% probability of a recession, it's very dangerous on that small probability of a soft landing. And two, this is so discounted, this recession. So to be materially short risk assets is a bit of a dangerous strategy.
But Alan, what's the upside for equities? So when you look at your investment strategy, so let's talk concrete portfolio building, like where do you find value right now?
So, look, it's right now taking a little bit of, it's been a decent rally, obviously an incredible month, and taking a little bit out of the market, but not materially short risk assets. So where's the value? The value is in fixed income. Slightly worrying, that's a consensus call. And the way I look at it, you do need the yield though, because look at the 10-year today in the US. If you just buy 10-year treasuries at 360, pretty soon you're going to be in 4.5%, 5% cash. So it's kind of a big negative carry trade to be holding 10-year treasuries. So that slightly worries me. So not going absolutely full on fixed income, but definitely buying into longer-term income streams because they won't be around forever. But kind of what worries me going forward is one more shock. And I'm worried about Japan. Right. Yield control.
Right.
Just unpack that for us, because the yen's had a bid. It's done very well.
Yeah.
It's the highest level in 3 months. Doesn't that ease the pressure on the BOG? Doesn't that take the risk off the table to some extent?
It's a fair point, Tom. It does a little bit, but they've got to get rid of this policy at some stage, right? It can't go on. The analogy I would make is, I was here ranting and raving about the zero rate structure that we had when the economy was doing well, look, it's just inappropriate monetary policy in Japan. And so when that breaks, obviously a Japan bond bear market, and actually you do see that in other corners of the Japanese bond market, and that could kind of lift the very complacent longs, because it's just like being short equities is a very consensus trade. Yesterday shows that. Being overweight bonds, and we want to get overweight bonds, is a consensus trade. So there could be a shock. Maybe it's not JGBs, maybe it's something else. But I do feel that 360 versus 4.5, 5, that's a lot priced in.
Yeah. Alan, I've been dying to ask you, have you had to change your logo because you're now like His Majesty's Bank instead of Her Majesty's Bank?
Yeah, as we say at Coots, that's a matter of public record, as opposed to policy. I'm told exactly what I have to say.
So are equities a matter of public?
No, equities we can talk about as much as you like, but no, we haven't had to change our logo. But yeah, thank you for our long association as a matter of public record with the royal family. But with equities, look, it's dangerous being materially short. Look, we're defensive. We've got some healthcare in the portfolio. That's always done well in these tough times. But going materially short equities is off the table.
Is healthcare, is it a crowded trade, briefly?
That is a fair point. Yeah, that it is, because it's so obvious. You just look back in history, what performs. Healthcare. What makes us stay in there is the fact that it's cheap. It's relatively cheap. If it was expensive, I'd be worried. Nothing worse than an expensive crowded trade, but I think we're okay.
It's a cheap crowded trade.
Yeah.
All right. I'm very pleased to say that the banker to the king, Alan Higgins, this
He's
is
not
me,
going to
not
come
Alan,
back.
CEO of Coos, is going to be staying with us. We'll get more of his calls, importantly, on these markets in the next few minutes. Thank you, Alan. Coming up, Beijing allows some COVID patients to isolate at home, indicating a softer stance on pandemic lockdowns. It's incremental, but it is significant. We'll get the details on that story. That is next. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 14 minutes into the European trading day. The picture across the board is one of gains. Now, this is after China appeared to soften its COVID stance, and then we also heard from Jay Powell signaling a slowdown in the pace of interest rate hikes, Tom.
Yeah, Beijing, as you said, will allow some virus-infected people to isolate at home then. It is a significant shift that reflects the pressure officials are under from a record outbreak, but of course also growing signs of public opposition with the protests over the weekend to COVID-0 and those rules. Joining us now is Bloomberg's David Chu, who's been analysing this with the team at Bloomberg Intelligence, and a really timely piece worth unpacking on the terminal in terms of their view as to how things unfold. David, why is Beijing and other cities, why are they relaxing these measures like quarantine requirements? Is this the first step of many?
Yes. First of all, I think the key reason is that the Omicron is much less fatal compared to the original COVID virus. So that is the fundamental precondition. And in addition, we have seen the discontent of the people in the society. And also the economy has been impacted a lot during the lockdowns here and there over the past several weeks. So I think that was the background for Beijing to decide to relax the requirement for COVID containment back to several weeks ago. But to be true, the local government was not was very cautious in relaxing the requirement. But we know that people expressed their discontent over the weekend, particularly after the fair in Urumqi. So that now I think the government, the local government, they saw the necessity for relaxation, so that we see what happened in Beijing and Guangzhou and other cities, that all of them are relaxing the requirement.
David, thank you so much. David Q there from Bloomberg Intelligence, looking at some great analysis, of course, of where the country goes next. Now, let's stay on the China story. Let's bring back Alan Higgins. He's Chief Investment Officer at Coutts & Company. Alan, unclear at the moment when you build a portfolio how you play China. So, you know, longer term, are we going to see more innovation in the U.S., I guess, because of these lockdowns, or could they reopen and reflourish?
So, for China, it's been a super disappointing market over the long run. And yes, we're overdue a bounce, this COVID news. We know about Omicron, don't we? The South African medical authorities told us about that, you know, very early on. And we finally learned from them that Omicron, you know, with some care, can be adopted into society. So that seems to be the way they're backing out, and that could be a bounce. But for us, you know, corporate governance, being a shareholder in Chinese companies is quite tricky, because is that really being run for you as a shareholder? You know, that's been known about, obviously, the state-owned enterprises for years. But now the pressure on the private sector that we see, it's quite tricky being a shareholder. At the end, you know, it's pretty tricky running a company anywhere. But when you've got the state really focused on holding many sectors down, it's worrisome for us. So it's not a big area of investment for us. Of course, we have some emerging market exposure. And when you have general emerging market exposure, you pick up a fair bit of China, but it's not an area of focus for us. So, and that would have to change for us. Yeah. That would really have to change.
You'd want to see some significant change before getting direct exposure. But do you look at some of those European companies that have a big footprint in terms of sales?
Yeah. So
is that one way to get exposure as you look towards a reopening?
That's been a much better way of getting exposure. As we know, the luxury goods sector has been phenomenal. The French market has been phenomenal because of that on a relative basis.
Yeah.
So that is a better way of getting exposure, and that's been the best way of getting exposure to China for years, as opposed to investing in China. And it's a great irony, right? Even with this slowdown, the strongest growth, but one of the worst stock markets, just goes to show there's not necessarily a correlation.
So is that the contrary actually for the UK? I feel like every day there's, some ugly news out there, be it data, housing today, it could be inflation, it could be, I think a fifth of UK households can't even pay for their water bills.
Yeah.
Does it mean that, because it's hit rock bottom potentially, then there's potential for investors?
Yeah, so with the UK, it's more nuanced. Yeah, it is strange. A lot of our clients, see the super pessimistic news on the UK, yeah, but the FTSE 100 performing well. Well, I think we all know what's going on there. It's the value sectors doing well. This year, it's value that is really in focus and having its day in the sun, if you like. So that's what's going on there. But under the surface, if you look at the FTSE 250, which is a bit more UK orientated and a bit more growthy, it's performed almost exactly the same as the S&P 500, i.e. a bit of a disaster. So for us in terms of the UK, yeah, we have some FTSE 100 exposure. We have some value exposure in general, which has helped this year, and kind of maintain that. Direction of travel, though, just like a lot of UK-based investors, is to be more global. We are more global than UK investors, to be clear, but we're likely to become even more global with that UK weighting coming down. Probably the opportunity is the 250, because kind of little secret about the UK, that the 250 earnings performance in the long run has rivaled the US. It's been as good as the US. And so that's probably an opportunity when we come out of this in the UK.
Okay, when we, not quite yet for the 250,
yeah.
but when we come out of this, there's a bit of a bid for gilts this morning, a bit of catch up from what happened in the US session. So the benchmark 10-year currently yields down by 10 basis points. Are you interested? Would you add exposure? Are you adding gilts? And if so, which maturity?
So again, we're more global bond investors than gilt investors. I mean, having said that, there's a lot of interest amongst private clients at short-dated gilts. One unusual aspect is that, just being for our UK clients, they are CGT free. Crazy when there's tax everywhere. So gilts below par because of the bear market, that's of interest. Generally, we have the same issue that we have in the US, though, Tom. You've got a situation where, okay, UK rates aren't going to go as high, but just rates are going to challenge 10 years until we really know rates are going to come down. So, yeah, no specific UK allocation, but the UK market, yeah, it's strategically, it's right to get these longer income streams, but to have a huge overweight exposure, we just don't see that as the right time.
Okay, interesting call on the 250. Watch that as an opportunity.
Yeah.
Remaining defensive, but not wanting to short these equities. Alan Higgins, always with important insights, Chief Investment Officer at Coutts and Company. Thank you. Coming up later in the show, mystery continues to shroud the millions, the missing billions, if only it was millions, billions at bankrupt crypto exchange FTX. The disgraced, of course, founder Sam Bankman-Fried, or SBF, speaking publicly for the first time since its collapse. We'll bring you the details, what he's been saying. That is next. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if you're being honest, This is a plant that cannot hold on much longer in a changing climate.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back to the Open, everyone. Happy December. It's December 1st, and we are 24 minutes into the European trading day. This is what stocks are doing, extending a rally on optimism over China and over Jay Powell. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Sam Bankman-Fried says he screwed up at the helm of failed crypto exchange FTX, but says he didn't ever try to commit fraud. In his first major public appearance since the implosion of FTX earlier this month, the 30-year-old told the New York Times DealBook Summit he should have focused more on risk management and customer protection. India's economy grew at a slower pace last quarter, accelerating 6.3% in the July to September period from a year ago. The reading came in below analysts' forecasts as inflation bit into production and consumption. India's chief economic advisor says the economy is still on track to deliver GDP growth of up to 7% this year. BHP says China's easing lockdowns and a recovering property sector will offset wider economic pain. CEO Mike Henry told Bloomberg that as the country comes out of lockdowns, momentum is building in the property sector. He says growth in China would be timely for the global economy, with recession looming next year.
We think that China is going to be a stabilizing factor for global growth. China coming out of COVID lockdowns, some momentum building in the property sector, and we can see green shoots there already. And of course, as the COVID restrictions are removed, we expect to see a pickup in sales as well.
That's the Bloomberg Business Flash. Tom, Francine.
Laura, thank you very much indeed. Let's zero in on a couple of the movers for you today. The brokerage AJ Bell coming in with some earnings that were a beat on the top line, profits for the full year rising. They've also raised their dividend as well, and AJ Bell gaining 2% on the back of that. Alstom, this is news that they have increased or expanded their partnership with Kazakhstan. Not a lot of movement, down 0.5%. Infineon, though, taking a leg up on the back of the very solid gains we saw just broadly across technology stateside. So the Nasdaq ending up more than 4%. Infineon, of course, is a major chip maker, so gaining on the back of that. Another interesting semiconductor story is TSMC expanding their build-out of super innovative chips in the US. But this is Infineon gaining 3.6% on the back of the optimism around technology. Francine.
Coming up, the Chinese president calls for efforts to bring calm to the war in Ukraine and talks with European Council President Charles Michel. We'll have plenty more on that story next, and this is Bloomberg.
700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Shifting gears, European markets continue the global rally boosted by Fed Chair Jay Powell signaling a possible slowdown in rate hikes this month. Weaker variant Beijing allows some patients to isolate at home after a top official says the country is entering a new stage in a fight against the pandemic, indicating a softer stance on lockdowns. And close to nothing, FTX's founder claims the crypto empire's fall wiped out nearly his entire fortune while apologizing for the company's collapse. Now, Tom, if you look at the markets, they're basically continuing the rally on China and Fed.
Yeah, two key factors, China and the Fed, and we can argue and debate whether or not equities are getting ahead of themselves over their skis in terms of what they interpreted, what they took from that commentary from Jay Powell, given that he said, yeah, okay, likely we're going to get to 50 basis points in December, but the terminal rate will be higher. It will be higher for longer, and also reiterating his concerns about the stickiness, the tightness of the labor market. That throws us to the non-farm payrolls on Friday, and then we'll get inflation data out before that next decision from the Federal Reserve in the second week of December. Currently, across the benchmark here in Europe, we're seeing gains of 0.7%, a very strong handover from Wall Street, but also the Asian session was strong as well. The Nasdaq ending up more than 4.5%, the S&P up more than 3%. The DAX currently gaining 68 points, 14,465, and the FTSE 100 just range bound, well, nearly 0.1%, just adding 5 points, 7,578 for the FTSE 100. It had a very good November, don't forget. Basic resources are part of the mix in terms of the gains. Iron ore, copper, all up, both up on the back of expectations of more demand out of China as well. Top of the list when it comes to your sectors, real estate up 2.6%. Interesting that here in the UK, more evidence of the weakness in the housing market coming through. Technology gaining up 2.6%. That's the read across from the US and what we saw stateside when it comes to the gains around technology. Bottom list is banks, currently down 0.8%. You've got divergent moves within the bond markets. You've got money moving in to sovereign debt in Europe, money moving out. Yields are ticking up in terms of the Treasury curve. Just a bit of catch up in terms of what happened yesterday. Yields were down significantly in the US. Now you're seeing that read across to the European space, and there's a bit of move up in terms of Treasuries yields. Now, Francine, you're looking at geopolitics, Xi Jinping, and the news out of China.
Yeah, the Chinese president has called for efforts to bring calm to the war in Ukraine and talks with the European Council President Charles Michel. And it's a sign, really, that China may be trying to now address one of its biggest points of friction with Europe as the two leaders met in Beijing. Well, joining us now is Noah Barkin, managing editor at Rhodium Group's China practice. Thank you so much, Noah, for being with us today. There was, I guess, a question mark on how much China would like to get involved in trying to put Russia, pressure on Russia to stop what's happening in Ukraine. Where are we now?
Well, I think that's still a big question. We've seen maybe a sort of rhetorical shift from China starting at the beginning of this month when German Chancellor Olaf Scholz traveled to Beijing. China saying it doesn't want to see a nuclear escalation in Ukraine, but I think it's a question about whether China is actually going to put pressure on Putin and how much influence China has over Putin's actions.
And it's consequential, isn't it? Because arguably, if anyone can hold Putin back, it is going to be the Chinese President Xi Jinping. So we've had Olaf Scholz. Then we have, of course, the European president in Beijing as well. And maybe they'll draw some lessons from the late 1980s when the US looked to that pivot with, of course, China versus the USSR. Do you think there's some, what are the opportunities here? How realistic is it that they can get Xi Jinping to move on this issue?
Well, I think nobody has the answer to that. I think what we are seeing is European leaders ramping up engagement with China. Of course, Xi Jinping was, during the lockdowns, was not meeting with foreign leaders. He is now meeting with them. Scholz visited him. He met a number of European leaders at the G20 summit in Bali. Now Charles Michel is there today. I think we have some voices in Europe who are now saying we need China's economy to cushion ourselves against the economic blowback from the war in Ukraine, and we need to do everything we can to try to pry Beijing away from Moscow. Whether that will be successful in the end, I think, is an open question.
Noah, how would you describe at the moment the working relationship between Europe and China? What does China need from Europe, and what does Europe need from China?
Well, we've been through a period, a number of years, where the relationship between China and Europe has deteriorated pretty significantly over the China's support for Russia in the war in Ukraine, coercion against Lithuania, human rights issues. Right now, I think Europe is at a very crucial moment. As I said, re-engaging with China. At the same time, it has growing tensions with the United States. Emmanuel Macron, the French president, is in Washington today, and there are growing tensions over trade, over the Inflation Reduction Act, which includes sort of made in America tax credits, which the Europeans are very worried about, subsidies that could lure investors out of Europe into the U.S. So this is there's a lot of moving parts at the moment. We also have the protests in China. So very interesting moment now for Europe-China relations, also for Europe-U.S. relations.
Is there a naivety amongst European leaders when it comes to that relationship with China, particularly in the context of the blowback from that proximity to Russia and the dependence on gas?
Well, I think European leaders have been saying for years now the era of naivete is over. I think the new British Prime Minister Rishi Sunak said something similar in a speech in recent days. I think it's an open question. We have seen a growing pushback against China in Europe, but I sit in Berlin, for example, and we have a very divided government here. We have a foreign minister who is pushing for a much more clear-eyed approach to China. But the Chancellor, Olaf Scholz, has leaned more towards engagement. So this is a battle that has been playing out within European capitals and in Brussels between the European member states, and I think it's going to continue for a while.
Okay, Noah Barkin, managing editor at Rhodium Group's China practice, joining us out of Berlin. Thank you for that analysis and the complexities then of Brussels' relationship with Beijing. Meanwhile, NATO Secretary General Jens Stoltenberg has called on allies to continue supporting Ukraine in its fight against Russian invaders. He spoke with Bloomberg's Maria Tadeo in Bucharest.
This is about ammunition to the existing systems, because there's an enormous consumption of ammunition. It's about spare parts and it's about maintenance. So it's not only about throwing in new complicated systems, it's also very much about ensuring that all the weapons that are already delivered are operational, function, and have enough ammunition to continue to play the role they have played.
And I know you don't have a crystal ball, but the times that we've spoken, some of your predictions were pretty accurate. You said to me, it does look like, or it could seem that they are ready to invade. Then a few months later, you told me this is now a sticky war. And my next question is not just the length, because it's impossible to predict how it ends, but in terms of what you see, how long can Russia sustain this war? Because when you look at combat-ready troops, they're already there in Ukraine. The army has been badly hit. The ability to produce new weapons, that takes time. Mobilization has been a mess. How long can Russia continue to fight this war?
So Russia has suffered heavy losses, and we also see the weakness in leadership, in morale in the Russian armed forces. At the same time, we should not underestimate Russia. They have mobilized hundreds of thousands of additional troops. They are trying to get more ammunition and weapons from other countries, including from Iran. And Russia has proven a willingness to actually take high casualties. So we are not underestimating the capabilities of Russia, the number of troops, and what they can continue to inflict on Ukrainian armed forces and the Ukrainian civilian population. That's the reason why we need to step up and continue our support.
But do you buy their narrative of either we win, Russia wins, or is World War III?
Also, most wars end at the negotiating table. I also believe that this war at some stage will end at the negotiating table. But what we do know is that what will be the outcome of those negotiations is absolutely linked to the strength on the battlefield. So if you want a negotiated peace solution, we need to support Ukraine so they can achieve outcome of negotiations, which ensures that Ukraine prevails as a sovereign, independent nation in Europe.
And I have a final question for you. I was struck by the amount of times you mentioned China yesterday and today. Is this because you worry the lessons in Russia and trade and security are two separate things, have not been learned and should be applied to China, or because you're fearful of a similar situation perhaps happening in Taiwan?
So I believe in free trade. I also believe that NATO allies should continue to trade with China. It's good for them, it's good for us. The problem is that we cannot only make these decisions based on commercial considerations. We have seen that with gas from Russia. It's not a commercial decision. It has direct consequences for our security. Over-dependency on commodities from authoritarian regimes like Russia makes us vulnerable, and we should not repeat that mistake when it comes to China.
That was the NATO Secretary General Jens Stoltenberg speaking to our very own Maria Tadeo. Now, coming up, mystery, a lot of mystery continues to shroud the missing billions at bankrupt company crypto exchange FTX. That's as disgraced founder Sam Bankman-Fried speaks publicly for the first time since its collapse. More on that next, and this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Whatever happened, whenever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators of the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. I was shocked by what happened this month.
Shocked by what happened. FTX founder Sam Bankman-Fried there speaking publicly for the first time about his crumbling crypto empire at New York Times Dealbook Summit. Joining us now to go through what we've been hearing from him is Ana Herrera, our senior editor for crypto. Ana, what were the key takeaways for you from this interview?
I think part of it is there's still so many questions.
Yeah.
Like I'm not sure he really answered how did you lose $8 billion? And also, I mean, it's surprising he still keeps doing interviews, and he admitted himself his lawyers probably, I think I was reading, would have told him not to speak. Again, it's like very convoluted still. We still don't know exactly how they ended up with the hole. He did say he didn't like knowingly, I guess, commit fraud. So it's still quite much a mystery.
I mean, it's the interview of the year, frankly. First of all, kudos to the moderator who did a great job in trying to press him, but he just didn't, you're right, I don't really understand why he did it, apart from the fact he maybe wants to seem as a good guy, like I'm not, I don't have any money, because it wasn't really, it wouldn't stand up in court. You're not sure you got any answers about anything.
I guess maybe one of the issues is like maybe asking him like the specifics, like if Alameda traded on your exchange, how did you not know what the extent of their margin was, and like were they using FTT as collateral? Those sort of specific questions might have been more helpful, but obviously I guess in that moment he might have answered with ambiguous answers still, right? So
yeah, so a lot of questions remaining. I mean, two of the big ones, as you said, what happened to $8 billion, and did you use your customer accounts, customer money in terms of some of those trades? What are you looking for in the days and weeks ahead? Where are we in terms of the scrutiny from regulators? How does this unfold from here?
I think we still have to know, we keep saying it, who their big creditors are, right? Like that's a big issue, because that might lead to more contagion. They've been able to keep them redacted so far, which might not be helping much, because people might be worrying, like, am I dealing with one of their big creditors, right? And then obviously we're still watching Genesis. They're struggling, and they're trying to raise capital so that they don't go bankrupt again. And it just keeps continuing in crypto, I guess. And here, I mean, I guess we still want to figure out what happened to those $8 billion that are missing, that big hole.
Yes, we need to find out where they are. I mean, what's going on? Is there an investigation? Is he going to go in front of a panel? Like, who's looking into this right now?
I think we reported early on in the early days of everything, and I guess his shock is quite relatable, right? Everybody was a bit shocked that the CFTC, the SEC were looking at it, other authorities in the U.S. as well, more from the AML, KYC perspective. And I guess, FTX was such a sprawling organization, as many crypto firms are. They're everywhere, so there might be, regulators everywhere might have a reason to look at it.
Okay, Ana, thank you so much. Ana Herrera, our senior editor for crypto. I mean, it's just an amazing story. Like, I find it incredible.
It's also deeply frustrating, right? For anyone who's a client, anyone who's linked to this business, where's that money gone? How was it misused, if it was misused? So many questions, so many central ties to the broader industry and sector, and so all that uncertainty continues.
Now, for more on the crypto landscape and the FTX saga, listen to Bloomberg Crypto Daily podcast hosted by Stacey Marie Ishmael, and you'll hear the biggest stories from the most interesting people transforming the world of crypto. Listen in Monday to Friday, wherever you get your podcast. Now, let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Beijing is to allow some virus-infected people to isolate at home, starting with residents of the city's most populous district. The landmark shift in policy comes as China's top official in charge of the COVID fight says the country's efforts to combat the virus are entering a new phase. A parliament-approved panel has found there are grounds to investigate South African President Cyril Ramaphosa in connection with a scandal over a robbery at his game farm. Ramaphosa's job could ultimately be at risk over the alleged cover-up, with lawmakers scheduled to debate the report's findings next week. Ramaphosa has reiterated his denial of any wrongdoing. President Zelensky says 6 million people are currently without electricity in Ukraine after Russia's attacks on the country's energy infrastructure. The Ukrainian president says he needs high-voltage equipment that can be repaired quickly, transformers as well as generators to get through the winter. Research from the London School of Economics suggests UK food prices have risen an additional 6% because of Brexit over the 2 years to the end of 2021. The study said customs checks, rules of origin requirements and sanitary measures for trade in animals and plants all added to friction for importers and exporters. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
All right, thank you. Coming up, French President Emmanuel Macron is in D.C. to meet with President Biden. High on the agenda will be the U.S. Inflation Reduction Act. But more importantly for Francine is the dinner menu, specifically cheese.
I mean, I love this. So the menu will actually include a cheese course highlighted by Oregon's Rogue River Blue. And this one, actually, the best cheese in the world. So the U.S. president is serving a U.S. cheese to a French president. I just find it brilliant.
Award-winning cheese, yeah.
I find it brilliant.
How's Macron going to react to that?
This is like cheese diplomacy. We'll talk about cheese diplomacy next.
Cheese diplomacy. Coming up, this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Welcome back to the Open. We are 52 minutes into the European trading day. You're seeing gains of 0.8% across the benchmark. Of course, a very solid handover from the US, and rip-roaring gains across the Nasdaq and the S&P, though futures are pointing a little lower, a little bit of profit-taking, no doubt, after such a strong day on Wall Street yesterday. Of course, on the back of the comments from Jay Powell, the expectation, at least from investors, that maybe getting a moderation in terms of the pace of rate hikes, even as he reiterated that the terminal rate is likely to be higher for longer. Some lines crossing when it comes to the economy of the Eurozone. Italian November manufacturing PMI rising to 48.4, so still in contractionary territory, but above the forecast of 47. Different picture for France. November manufacturing PMI for France coming in 48.3. The pre-lin number had been for 49.1. So both numbers in contraction, slightly better though over in Italy versus the forecast. Euro dollar currently trading at 1.04. That's more about the weakness in the dollar. Bloomberg dollar index currently down 0.4%.
Now, Tom, the French president, Emmanuel Macron, is on a 3-day visit to the United States, meeting with U.S. President Joe Biden in D.C. today. The meeting comes with rising tensions about trade, with European criticizing the U.S. Inflation Reduction Act. So here's what the German Chancellor Olaf Scholz had to say about it.
The Inflation Reduction Act plays a major role in American trade strategies. Conversely, of course, we must ensure fairness in the interaction between Europe and the United States. That is why France and Germany, the French president and I, very early on, called for the European Union to contact the American government directly and start negotiations on this issue. That happened. There is now a joint working group, and both I and the French government have addressed the issue in talks with the American government. So we're working on it.
Now, for more, we're joined by Bloomberg's Caroline Conan. Now, Caroline, just to make sure that everybody, gets it, it's basically the Europeans have lodged complaints with the WTO saying this is unfair subsidies. So what does Emmanuel Macron plan to achieve with this U.S. visit, apart from trying U.S. cheese?
Behind the cheese and the baguette, winning this award last night, and all this red carpet celebration, of course, you have the big trade tensions between the US and Europe. Macron really wants to be the voice of the EU in this trip, and he has been one of the first to criticize the Inflation Reduction Act, saying it creates unfair competition and that it should be a wake-up call for Europe to create its own Buy European Act. Initially, he didn't receive a lot of support for this idea of the Buy European Act because it's really a protectionist response to a protectionist issue. But of course, one of the solutions could be to file a complaint at the WTO. This would take, however, years to resolve. So Macron will try today in Washington, D.C. To find short-term diplomatic solutions, perhaps some exemptions for European companies, or perhaps similar access as Canada and Mexico for some of these subsidies. We'll see whether the cheese diplomacy actually produces any result today.
The cheese diplomacy. I like the way that you got like a baguette award in there as well. Is this the US just trolling the French president with the cheese? I don't know. When it comes to electric vehicles, this is a friction point as well, Caroline, between the French, between the Europeans and the Americans. Why?
Yes, this is really at the heart of this Inflation Reduction Act, because basically Americans who buy American EVs with American components and batteries will receive tax credits of $7,500. So that's a lot of money. Whereas if you buy an EV car in Europe, basically you can receive some subsidies no matter where your component or your battery was made. So clearly this puts all European firms at a competitive disadvantage, and especially because France makes a lot of EV components.
Okay, Bloomberg's Caroline Connor on that visit. Macron is in D.C. Thank you. That is it for the European Market Open. Surveillance Early Edition is up next. Markets in Europe's higher by 0.7. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Shifting gears, European markets continue the global rally boosted by Fed Chair Jay Powell, signaling a possible slowdown in rate hikes this month. Weaker variant Beijing allows some patients to isolate at home after a top official says the country is entering a new stage in a fight against the pandemic, indicating a softer stance on lockdowns. And close to nothing, FTX's founder claims the crypto empire's fall wiped out nearly all of his entire fortune while apologizing for the company's collapse. Now, first thing is first, so let's check on the markets. We're seeing a nice little lift for European stocks across the board. Now, this is really on two main stories, China and the potential taking out of lockdowns, or certainly a softening on the stance when it comes to zero COVID policy. The other story is, of course, Jay Powell. Now, we did have some important analysis by our Mark Cudmore, our managing editor for MLive, saying, look, Jay Powell pretty much delivered what the market was expecting, so look out for data. That's the important data coming out of the U.S. U.S. 10-year yield, 3.6347. S&P futures pretty much flat, and then we also look at sterling 1.2114. We had some inflation, and we had some housing prices, actually, nationwide survey, and housing prices in the UK for the month of November fell much more than expected. Of course, that's a correlation with higher borrowing costs, higher mortgages. This is a picture overall for the FTSE, gaining some 0.2%. I think it's mainly, all of the industry groups are gaining, apart from energy, which is down some 0.4%. The other big story, and we are very data dependent. Certainly central banks are looking at data, so we follow what central banks want to look at. Euro area November manufacturing PMI coming in pretty much as expected, 47.1. This is the final reading. The preliminary had it at 47.3. As expected, it is a contraction, but as expected, it doesn't have a huge impact on euro dollar because this was pretty much priced in. So again, euro dollar 1.0436. Now, the Fed Chair Jay Powell cemented expectations of a deceleration in tightening starting with the December hike. He also presented a case for achieving lower inflation without tipping the economy into a deep recession.
As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections.
Investors welcomed the shift in tone, with stocks and bonds rallying pretty strong. Now, we're now joined by Geraldine Sundstrom, Asset Allocation Portfolio Manager at PIMCO. Geraldine, as always, thank you so much for coming on. What did you take from the Powell speech? It feels like it was pretty much as expected, and maybe markets are still too positive about the outlook for inflation coming down.
Yes, we would say that the delivery of Powell was very much as expected. He has acknowledged the fact that inflation is showing promising signs of coming down. But at the same time, he didn't give up on the fact that rates would have to remain relatively restrictive for a while. So we feel that the market has moved very fast on this news, and probably what now is going to be more complex and much more data-driven.
So, Geraldine, what does it mean, first of all, where you want to be invested on the yield curve, and how will that shift going into 2023?
The big question is how sticky inflation will be. It is quite easy to bring inflation from, say, 10% down to 4%, but from 4% to 2%, which is the target from most central banks around the world, is a completely different task, and where we think there'll be a lot more inertia. So the fact that the market has started to price quite a bit of cuts when it comes to the US curve in 2023 might be a bit premature, all the more than we're looking at China reopening, which could boost commodity prices, which have helped quite a bit recently. In terms of yield curve, the fact that a lot of cuts are priced in makes us a little bit more cautious at this juncture, especially because we have an inversion of the yield curve that is pretty deep.
So, Geraldine, what does that mean? So going forward, I don't know whether you think there's still a small chance, and whether that chance is 10 or 15% that we avoid a recession in the US, and what that would mean in terms of recalibration, for example, for fixed income.
Well, we think that the soft landing in some way has been, I would say, as of now, is pretty much priced fully into equities. Fixed income is looking a little better. We think that over time, if you can look through all the volatilities, the stickiness of inflation, and you have a bit of a longer horizon, you should be fine in high quality fixed income. But what's really important for us is that we can't put the cart ahead of the horse here. We cannot start to price the recovery in most asset prices when we haven't seen the recession yet. That's why the focus for us in terms of sequencing and re-engaging in risks and portfolio has to be first and foremost in fixed income. But at this juncture, it's not yet, pound the table. There's still a lot of uncertainty in terms of monetary policy and in terms of stickiness of inflation.
Geraldine, do you see anything of value right now in Europe? I know, again, it's amazing how the inflation shift changed in the UK because of in Europe in general because of the war in Ukraine and the extra pressure that's putting on ECB. But do you see a value play, for example, of bunds versus BTPs or something like that?
Well, most spreads now, especially bunds versus BTP, are probably fair. Not much very attractive currently in Europe. The Euro stock has been very strong in relative terms. The dollar is a little expensive, that's for sure, but it could remain still expensive because the trade balance, Europe is going to be very sensitive to a global recession in terms of export, and has to import relatively expensive fossil fuels. So not yet attracted by the euro. We think that equities are too sanguine when it comes to earnings forecast. And the war in Ukraine remains a substantial unknown, especially when we look 1 year from now and what's going to happen in the winter. So in terms of region, we prefer to focus on the US, which feels like a more secure place.
Geraldine, I love in your notes how you put, look, if you look at cross-asset valuations, you go from Tina, there's no alternative, to Tara, there are reasonable alternatives. Do you see any of those alternatives in the UK or emerging markets?
Yes, I think emerging market is a little bit ahead of developed market in this cycle, which is quite unusual. Central banks have started to hike interest rate much earlier than developed market, and so we see that the hiking cycle is coming to an end in a number of places. The level of inflation has started to come down, and therefore the real yield differential with developed market is looking very attractive to a level that's rarely seen. At the same time, a number of these currencies, because of terms of trades and current account balance, are looking relatively undervalued. So one area where we're willing to sort of dip a toe and step is into select emerging market currencies, notably in Latin America, which offer high carry and yet on the right side of things when it comes to commodity and trade balance.
Okay, Geraldine, very quickly, what's the one thing that you think, I don't know whether we're talking about bubble, I don't know whether it's a certain type of an asset class, but is there a warning sign or an alarm bell going for something that you want to get out of in the market now before 2023?
No, I wouldn't say so. If I knew that, that'd be great. There will be surprises. Interest rates level have risen globally extremely fast. And now and then, we're going to find out about areas that are going to be more sensitive. For sure, the one thing, and that's playing already into fixed income market, is that some economies are way more sensitive to the level of interest rate. And here I think about Australia and Canada. And therefore, this makes the fixed income market probably, a bit ahead and more attractive than the ones in Europe.
Geraldine, as always, thank you so much for joining us. Geraldine Sundstrom, their asset allocation portfolio manager at PIMCO. Now, coming up, we'll take a look at China's changing tone on COVID curbs. That's coming up next, and this is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Inflation hasn't been this high in the UK since 1981.
Then surveillance for in-depth analysis.
Jonathan Ferro, Lisa Bramwitz, and Tom Keene, thrilled you're with us.
Inflation in the United Kingdom, brutal.
Underlying food inflation doesn't appear to be that bad.
It ties back to the tenuous situation of what we're looking at with respect to energy.
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition on Francine Lacroix here in London. Now, Beijing will allow some virus-infected people to isolate at home. A significant shift that reflects the pressure that officials are under from a record outbreak and growing signs of public opposition to COVID-0. Now, for more on the shift, let's bring in Bloomberg's Rebecca Chung-Wilkins, our Asia government reporter in Hong Kong. Good morning, Rebecca. So how is the tone actually shifting in China?
Well, this is certainly the biggest change that we've seen from authorities so far. We've seen them sort of downplaying the virus and China's top COVID czar saying that we're moving into a different phase, a new phase of COVID control as well. Two sort of big significant things. One is this focus on getting the vaccine delivered to China's elderly population. This is seen to be crucial if there's going to be full reopening. And the second is that Beijing will also start allowing low-risk COVID-infected patients patients to actually isolate at home. And that's something that Hong Kong also moved to do in the early stages of it when it was opening up.
So, Rebecca, how are things looking since the weekend's protests? Has the civil unrest actually calmed down?
Well, it's been relatively muted. I mean, we really saw sort of the apex of that disruption coming through the weekend, and in part that's because of the very heavy police presence that's been rolled out through many major cities in China, Beijing, Shanghai, and so on. We are also, though, keeping an eye on the fallout from leader Jiang Zemin's death. Mourning in China historically is a period for people to legitimately come out on the street and gather publicly. So this may provide sort of some kind of opportunity to sort of rally protesters together. And we are seeing on social media as well some nostalgia for the period that Jiang oversaw, a period of great openness on prosperity, which is somewhat of a contrast, of course, what people are facing now under 3 years of very strict COVID control measures under Xi Jinping.
Thank you so much. Bloomberg's Rebecca Chung-Wilkins there on the very latest out of China. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. In South Africa, a parliament-approved panel has found there are grounds to investigate President Cyril Ramaphosa in connection with a scandal over a robbery at his game farm. Ramaphosa's job could ultimately be at risk over the alleged cover-up. With lawmakers scheduled to debate the report's findings next week, the president has reiterated his denial of any wrongdoing. Now, President Zelensky says 6 million people are currently without electricity in Ukraine after Russia's attacks on the country's energy infrastructure. The Ukrainian president says he needs high-voltage equipment that can be repaired quickly, transformers as well as generators to get through the winter. NATO's Secretary General says the alliance must avoid repeating mistakes it made in relations with Russia and ensure it limits dependence on China. Jens Stoltenberg stressed that nations cannot make decisions solely on commercial considerations. He spoke to Bloomberg after foreign ministers met to discuss issues including Russia's invasion of Ukraine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Coming up, don't miss our exclusive interview with the Veolia Chief Executive, Estelle Brakianov. That's coming up next, and this is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if you're being honest, this is a plant that cannot hold on much longer in a changing climate.
analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the world's leading water company, Veolia, says it's completed the disposal of assets proposed to remedy competition concerns in the EU regarding its takeover of utility giant Suez. Well, joining us now is the Veolia Chief Executive Officer, Estelle Brachlianoff. Thank you so much for joining us today. When you look at some of the things that Veolia has said, you're very optimistic about the future in terms of earnings growth and the potential for Veolia. What does that mean you're seeing in the economy? The economy in 2023 could be a very tough operating environment.
You're right, Veolia is a very solid company, very resilient as well as very agile to adapt to the new environment we're facing today, be it in energy crisis or inflation altogether. We've delivered very strong Q3 results, and we intend to go on for the rest of the year as well as for next year. And you know what supports our growing of results is actually both our resilience, as I said. 85% of our business is really immune to the macroeconomics, as well as actually the benefits that we are delivering on the merger with Suez. We are ahead of our plan in terms of synergy deliveries. And altogether, you know, the market we are a leader of is actually fast growing and super attractive, because we're talking about wastewater and energy and environmental services.
So talk to me a little bit about water. I know you're present, Veolia is present in France, Central Europe, Spain, US, and Chile. You know, are there groups, and I'm thinking of either certain types of companies or farmers that could, you know, weather higher water prices? And is that what will happen in 2023?
What we've rediscovered in some European countries or in the US is actually the preciousness of water this summer. And actually, we're in the beginning of December, and we still have water restriction in some countries, which is very, very rare, usually in the start of the winter. The good news is we have the solution to tackle this water scarcity from improving the yield of the various distribution network of water, thanks to artificial intelligence in order to detect leakage before they appear, as well as, for instance, a specific technology of reuse wastewater to recycle it after it's been treated and to provide it to the industrial or agricultural consumption. It could be even human consumption. So we have the solution, and actually a company like Veolia is here to deliver them and to speed up in the various countries we operate.
How are you expecting the energy compound to play out in 2023? There's a number of caps, for example, on prices in some European countries. We're also talking about a windfall tax. How would that impact Veolia earnings going forward?
So in terms of earnings and directly, you know, we're really well protected against all that, since, you know, the energy price is really passed through for Veolia's P&L, so the margin is protected, if you want, as we've seen this year, and we intend it to be the same next year. But I guess the energy crisis we're facing in various countries is another testimony that we have to speed up the getting rid of importing fossil fuel for strategic reasons, and I would say strategic economy of various countries, and of course the environment as well as price. And it happens that we have an untapped potential in Europe and in the US of energy source, which is the waste and the wastewater. Biogas, typically, which we can speed up the delivery of. It's a locally produced, renewable type of energy, which we can, you know, again, produce more and more. And this can be very significant potential. And I guess that's why the energy crisis, again, we are totally fully protected in Veolia, but there is a potential for growing the business in sectors like the one I've just mentioned.
But if you look at the windfall tax, that could be on electricity and biogas sales. Are you expecting more windfall taxes from more countries? And again, what does it mean for certain, places where you operate in?
No, actually, we don't expect any impact of the windfall tax for Veolia. One big reason is because we don't have any extra profit from this crisis. I guess it's neutral for us. So we're not in the situation of generating extra profit from the price of energy. We are in the situation of benefiting from the fact that there is a trend to save more energy and to produce more green energy over the mid and long term, as I explained with the biogas example. But no impact expected of a potential windfall tax for Veolia. And that's why, the strong result we've produced for Q3, we expect it to be the same for the end of the year and for next year as well.
I know Veolia also manages some district heating networks, for example, in Central Europe. If some of these assets were to come back on sale in France or elsewhere, would you be interested in bidding for them?
Actually, we are always interested in selling and buying assets to try to see where we can increase the most value for us. So we are always having a very agile version of our balance sheet, if you want, but nothing specific that we have in mind for the short term. And of course, I intend to maintain the big rigor we've had over the last few years in terms of buying. It has to create value, and we are very rigorous in terms of maintaining a leverage around 3 times EBITDA for our balance sheet. Yeah. So, within those constraints, we're always considering options, but I intend to still be very rigorous again.
In just 20, 30 seconds left, how do rising interest rates actually impact possible M&A and how you run the business?
Actually, we are 85%, with fixed interest rates on our balance sheet. So I guess it's not a question for Veolia, really. Again, the question is more to select the opportunities we have, given the fact that we are in a market with a lot of potential on biogas, on energy efficiency, as I mentioned, on tackling the various scarcity of natural resources. Yep. And again, going on with delivering very good results.
Thank you so much for your time today, Estelle Brachlianoff, there, the Veolia Chief Executive Officer. Now, coming up, we focus on the UK for our new show. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one one covers the world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Hi, everyone, and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges facing the British government, the economy, financial services, and the markets. I'm Francine Lacqua here in London, and this is a weekly show. So on the program this week, one of the best or most pressing issues in personal finance. We look at the sustained pressure that inflation is placing on the UK and housing, well, UK housing and mortgage sector. Plus, trying to get a big bang out of Brexit, our finance team tells us how the city is reacting to reports that the UK will relax banking regulation. But first, we start our investigation into how the UK has become home to one of the world's biggest gambling industries. That's today's Bloomberg Big Take. And for more, we're joined by Gavin Finch from the investigations team, who spent months trying to figure out, of course, this industry, what it brought. And Gavin, first of all, congratulations to you and your team. It's a brilliant read. We also pushed it out on social media. It's a well-researched, thoughtful piece. Why is the UK so liberal on gambling?
So I think it can all be traced back to the Gambling Act of 2005. This allowed firms to advertise sports betting, casinos, and poker on TV and radio kind of for the first time. And somewhat unbelievably, until 2014, gambling companies based offshore could even sell to British customers without a UK license. But crucially, the law predated the arrival of the smartphone, and betting firms have been exploiting that blind spot ever since, developing aggressive, habit-forming games tailor-made for obsessive gambling, and cashing in while a significant section of their customers racked up huge losses. And while there have been several attempts to tighten regulation of the sector, the gambling industry has been very, very effective at lobbying successive UK governments that it should be left alone.
But Gavin, what are we looking at? Is this addiction, and does it show the direction of travel that other countries could take when it comes to people, losing a lot of money by gambling online?
Yeah, I think it does. What has happened in the UK in the last decade, the surging rates of gambling addiction, hundreds of suicides every year. Estimates put it at more than one suicide a day due to gambling-related harm. It's an object lesson in the dangers confronting the US as it emerges as the new frontier for gambling. Most US states have now liberalized their gambling laws in the last couple of years to allow online gaming. And all the big gambling companies are now queuing up around the block to try and repeat the same successes, as they see it, as they've had in Europe, in the US.
So, Gavin, why have, first of all, online casino games become so popular in the UK?
So it all comes back to the smartphone. The iPhone really did change everything. Suddenly people had a portable device with a large screen, internet connection, a lot of processing power, and that was just perfect for these online casino games. Gambling companies have spent a lot of time and a lot of money designing these games to be highly attractive, and the smartphone was the sort of perfect delivery device for them. You no longer need to walk into some forbidding-looking gambling store off the high street to place a bet. You can do it anytime you like. You can do it on your commute, on the sofa, in bed. Everyone now has a virtual casino in their pocket.
And so this is why it's probably a lot more dangerous than other gambling products, right? These online casino games. What are we doing about regulation? There's also software, you put your, email address and saying, I don't want to gamble anymore, and it stops, most gambling sites on your phone.
Yeah, so that's GamStop, and that has been a game changer for many gamblers, but it's reliant on the individual, the addict, to kind of isolate themselves, which, you know, is a pretty flawed approach anyway, because addicts generally don't make the best decisions. But secondly, GamStop is relatively easy to get around. There are hundreds of websites out there kind of giving tips on how people can get around that ban once they have self-excluded themselves. And in our story today, we feature, you know, a sort of case study of one guy who did get around it. You know, he was only doing it for sort of research purposes, but he shows how easy it is to get around. So the kind of the consumer protection, I guess, has been outsourced to the individual, to the gambler. That's the issue.
Gavin, thank you so much. Gavin Finch there, of course, with some great reporting, him and his team. And if you'd like to read Gavin's piece, just type NI Big Take on Bloomberg Terminal. You'll find it on Bloomberg.com. I also mention it in my social feed. Now, the UK's Financial Conduct Authority has undertaken research into online gaming and has highlighted harmful design practices to manipulate consumers in new ways and more easily than ever before. That's something that the regulator says encourages excessive risk-taking or risk appetite and gambling-like behavior. So we're now joined by Therese Chambers, Director of Consumer Investments at the FCA. So Therese, thank you so much for joining us on this very important topic. When you review certain platforms and look at gambling type obsessions, what have you learned and what's the next step? I don't know whether you can regulate them or what can happen to protect consumers.
Yeah, absolutely. So we identified a really significant increase in activity on trading apps that we decided to look into. And the research that we have recently published shows that there has effectively been the use of gamification techniques that are designed to draw investors in, to encourage them to increase the volume of their trading, and also to encourage them to increase the level of risk that they take as they're trading on the apps. And this is very concerning. It's very indicative of problem gambling type behavior. And we conducted in-depth research with over 3,000 consumers who have experience of using these apps. And many of them actually described their interaction with the apps as being like gambling. They described it as being similar to being a spread betting app.
So can you tell us a little bit more about some of the tricks you used? I guess some of the apps promoting gambling and risk appetite, and what you can do to respond or regulate that.
Yes, of course. So we see lots of positive reinforcement techniques. So when someone makes a trade, they get a big congratulations message. There's a shower of confetti on their phone screen. People get points and badges. There are leaderboards. So the more you trade, the higher up the leaderboard that you go. There are push notifications that give you really up-to-date news on market changes, price changes, to really build that fear of missing out emotion that can then drive investors potentially to respond by undertaking further investments. In terms of our next steps, well, we're following up with the trading firms. They are regulated by us, these 4 trading app firms. We're following up with them and we are reminding them of their obligations under the new rules that we're introducing later this year, the Consumer Duty, which is all about protecting retail investors and all about requiring firms to act to deliver good outcomes for retail customers. And that's the discussion that we're having with those firms.
And have these firms engaged with you? Are they ready to change or make things a little bit easier, or do you see it as we have to go harder on them once the rules come into place?
Yeah, we're in dialogue with the firms.
Okay. Therese, more broadly, how is the behavior of retail investors actually changing in this economic downturn? Are people taking more risk?
Yes, so I think it's a feature of economic downturns more generally that what we tend to see is that frauds and scams go up, and often when people are financially stressed, they look for opportunities to make money, and they can turn to high-risk investments. It's a big concern for us.
Therese, can you give us a little bit of a sense? if, you know, when you look at crypto, and I know you don't regulate crypto, but how is consumer behavior changing? And again, can you strengthen the message because of what we saw with FTX? What are some of the things that you'll be working on in the next 12 months?
Yes, definitely. So interestingly, two of the trading app firms that we have looked at offer crypto, and what we have seen is a significant uptake in consumer purchasing of crypto assets through those platforms. Consumers should only buy crypto if they can afford to lose their money. That is the message that we have constantly put out to investors. And I think, you know, what has happened with FTX is a really good example of the risks that are involved.
Therese Chambers, thank you so much for joining us, Director of Consumer Investments there at the FCA. Now, coming up, we're next for UK house prices. We'll also unpack the market with the latest data. That's coming up next, and this is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, UK house prices fell more sharply than expected in November. That's according to Nationwide Building Society. Now, the mortgage lender said home prices fell 1.4% over the month, the fastest drop since June 2020. Our Lizzie Burden has been taking a deep dive into the figures. So, Lizzie, good morning. Walk us through the latest data.
Well, Francine, all the data point in exactly the same direction, and that's to say that the UK is having a house price correction. The nationwide figures show that house prices fell the most in November since the start of the pandemic. But if you ignore COVID, it's the biggest drop in growth since the financial crisis. We've also had figures from the Bank of England which show that mortgage approvals are at their lowest since the start of the pandemic as well. And we've had data from Zoopla, the property portal, which show that the gap between asking prices and agreed prices is its widest since January 2021. So what's going on here? Well, we've had a mini boom in house prices driven by the race for space, people wanting bigger gardens when they're working from home, the stamp duty cut, and of course, pandemic savings. But now we're having the perfect storm in the UK because we've seen the rapid rise in mortgage rates, especially
in the wake of Liz Truss's mini-budget, a rise in taxes after Jeremy Hunt's fiscal statement, and both feeding into the cost of living crisis here in the UK. But where you've seen other asset classes rapidly readjusting to the global interest rate environment, house prices are only just starting to catch on.
So, Lizzie, what lies ahead? How much more are prices likely to drop?
Well, the Office for Budget Responsibility has forecast a 9% drop over the next 2 years, but there are a number of factors that could mitigate against that. So we've got a very well-capitalised banking sector in the UK. The poorest third of households actually only hold about 5% of mortgage debt. You've also got many more people on fixed-rate mortgages now than in 2008, and you can always hope that we don't get a big job shakeout during this recession. But I've been looking back, Francine, at history, and they've picked out the 4 biggest house price falls over the past century. And what you can see from the 1950s experiences, you don't necessarily need a big spike in unemployment as a prerequisite for a house price fall. But what we can also learn from history is that on average it takes about 8 years for house prices to correct themselves. So reality is they fall fast and they rise slowly.
All right, Lizzie, thank you so much. Lizzie Burden there with some great analysis and also a bit of a history lesson. Always go back in history to see what happened in previous crises. Now, for a broader look at the UK mortgage market within the European context, we're also joined by John Stepek. He writes for Bloomberg UK's daily investment newsletter, Money Distilled, former executive editor of the UK biggest investment magazine, weekly magazine, Money Week, also author of The Skeptical Investor, Guide to Contrarian Investing. I feel like I'm a skeptical house price commentator. First of all, John, when prices fall, so of course it's mortgage, but it's also just you don't know what the economy looks ahead or looks like in the next 12 months. You also see an opportunity maybe for foreign buyers to come in because pound is so weak. So what are you expecting in terms of mortgages and house prices?
I mean, honestly, in the UK, I think house prices are going to fall. I actually think Lizzie made a really interesting and good comment there, which was that most asset prices have already adjusted to higher interest rates. Houses just don't do that as quickly. And the other thing that's interesting is the rate at which they do so is definitely linked to how fast interest rate changes flow through to the mortgage market. And in the UK, although the mortgage market, we do have more fixed rates, in terms of the kind of global context, our mortgage market is actually quite short term. So, I mean, for example, a 10-year fix in Britain will have people looking at you as if you're, slightly mad.
You're mad because here we do 30 years.
Yeah, exactly. Right? Well, no, a 10-year fix here would be a very long time.
Yes.
Yeah. Whereas, for example, that's, that would be a short term in France.
We're all cursing, saying, I wish I had a 10-year fix.
Yeah, no, right? I do know. I don't want to talk about my own exploits in the housing market, but I have fixed for long periods of time when rates were falling in the past, and that, makes you feel like an idiot.
Yeah.
But the thing is, it gives
I'm brilliant at buying places, always at peak and sell at bottom. It's a great investment. I should read your newsletter more. John, overall, so how does it compare, first of all, with European, other European mortgage markets? And I remember the NatWest chairman coming on and saying, crunch time is actually mid-2023, where a lot of these fixed income mortgages fall off.
Yeah, I mean, that's the good point, because the 2-year fix, that one of the problems when we're talking about fixed rate mortgages, so a lot of people have taken out 2-year fixes. So again, obviously they're quite short term. They kind of will be up the middle of next year. Now, it depends on what interest rates are doing at that point, but almost certainly, in fact, no, definitely anyone coming off a mortgage at that point is going to be paying more. The question then is whether they can afford it. But in terms of actual house prices, the damage is already done, because regardless of whether employment stays high or not, the amount that people can borrow is going to drop, and that means that's the amount that people can pay for a house is going to fall. So, I mean, I don't think there's any question that we're going to see house prices fall. The question is actually how bad does it get, and that depends much more on the actual economy.
So how bad does it get? I mean, we're not talking subprime levels, right? I don't know, because this, especially in the UK, we've already gone through a lot of that pain. So I guess mortgages, you can't borrow like 10 times earnings.
Yeah, exactly, and I think that's the other key point, is actually the UK is not as badly off as some European countries or some kind of global countries. I mean, if you look at Australia hadn't had a recession for about 25 years. It's now having one. Interest rates are going up. because it hadn't had a recession for so long, house prices just kept on going up. And again, they've got a similar mortgage market to ours. So a small rise in interest rates has already seen, I think prices in Sydney are off about 10% year on year. And here in Europe, in Sweden, for example, and actually Denmark as well, Denmark had the world's first negative interest rate mortgage in 2019, which shows you, I know, it's nuts. I mean, I wish I could have got that. And so, you know, interest rates were so low, and it doesn't take a very small rise for them to then have a massive impact on house prices.
John, you'll probably remember this, like 15 years ago, there was like a fashion of borrowing in Japan for like 0 interest rates. I mean, it's never good because then you're very dependent also on currency swings.
Oh yeah,
right?
I mean, well, Poland's having that problem
idea.
just now. The government had to step in and sort out, you know, offer a lot of help to mortgage owners because there's zloty. A lot of people had borrowed in foreign currencies. So
invest in your currency is maybe wise, John.
Don't have your mortgage in a foreign currency. That's not a good idea.
John, thank you so much. John Stepek there from Money Distilled. Now, coming up, Bloomberg understands that the UK government will relax the ring fencing of banks as part of efforts to get a big bang out of Brexit. More on that story next, and this is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, Bloomberg understands that the UK government will relax the ring fencing of banks as part of efforts to deregulate the City of London and get a big bang out of Brexit. This was first reported by the FT. Joining us now is Bloomberg's Tom Metcalf, who covers all things finance in the City of London. So, Tom, thank you so much for coming on. We've been talking about bonuses, about call-ins, and now ring fencing. So first of all, does ring fencing even make sense in 2022? This was introduced on the back of the financial crisis?
Yeah, look, first of all, I should apologise for coming on your show and talking about ring fencing as the first topic. It's very one of these arcane things that have come out of actually the global financial crisis. I mean, I think this is a very specific sort of policy, and like you say, it's kind of been implemented already. So what the government is looking at is, can we roll it back a little bit, make it maybe easier for some banks? What they're finding is actually the banks who spent hundreds of millions on this, the Barclays, the HSBCs, they are pretty happy with it as it stands. They kind of almost now view it as sort of, they paid for it and it's kind of an advantage for them in terms of competition. So what they're really looking to do is kind of tinker around the edges, and it affects banks like a Virgin Money, a Santander UK, and a TSB.
But so what can we expect from this government? This is not the Truss government that wanted to, liberalise, deregulate, and kind of really boost the City of London almost at any cost.
Yeah. Well, and I was listening to your podcast yesterday, and it's, much more of a whimper what the banks are trying to do around Brexit. All this talk about huge Brexit dividends. What they're finding is, as they look at the regulations, it turns out the City of London is largely pretty happy with what they've got, and aren't looking for these kind of, this fire big regulations. So really what we're seeing under the Sunak administration is basically a little tinkering on the margins and just trying to get those advantages where they can, but often it's, business as usual.
So who are they trying to, I guess, sweet talk? Is it the Goldmans? Is it like JP Morgan? Or do they need to also try and find an agreement, for example, on clearinghouses to keep the EU on side?
Yeah, on the ring fencing, it sounds like it's largely targeting these sort of domestic UK lenders, and in fact, they might be made sort of exempt from these requirements.
They could be the smaller ones, right?
Yeah, exactly. So it sounds like they're targeting people without big restricted trading, i.e. anything with a big investment bank would not be affected by these changes. So it sounds like, JP Morgan, Goldman Sachs won't be impacted. We do talk to the Treasury, and they say, look, this is still under debate. Nothing's been decided, so perhaps that changes. But right now, I'd say a Goldman and a JP Morgan, nothing changes for them.
And Tom, again, this is, so I don't know whether they need to be more friendly to the City of London because of Brexit, so that because people had to leave. Ring fencing wasn't really started because it wasn't an EU rule. So does it, again, give us an indication of the thinking of the government or of what else they could do?
Yeah, I think it's fair. They're sort of casting around for stuff to change and whatnot. And there's no obvious kind of, oh man, could we roll this back? Fantastic.
Yeah.
So instead, it's all these fairly arcane things, which I don't think really change the sort of debate or the structure of the city really in any great way.
Very quickly, the call-in. So this was basically, I love the call-in. This was giving ministers power to overrule regulators, but they scrapped that.
Yeah, no, exactly. So they backed away from that, which was a pretty explosive thing, draw a lot of attention in the city, worried the Bank of England, we understand. And they've kind of rolled that back and said, you know what, we will put that on pause.
All right, Tom, thank you so much. Tom Metcalf there from our finance team. Now, for more on regulation, as Tom was saying, don't forget our UK and London Focus podcast, In the City. Episodes are out every Thursday on your favorite podcasting service. And this week, we're joined by City Editor Catherine Griffith and the new Lord Mayor of London, Nicholas Lyons. So don't miss that. We discussed Big Bang, ring fencing, and bonuses. Well, that's it for Bloomberg UK. It continues, of course, in the next hour with Matt Miller, Katie Lyons in New York, or Anna Edwards here in London, and this is Bloomberg. to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It is likely that restoring price stability will require holding policy at a restrictive level for some time.
China risk is something to take seriously. The pressure is unrelenting, and it certainly hasn't gotten any better. If anything, it's gotten worse.
Look, I've had a bad month. There's going to be a time and a place for me to sort of think about myself and my own future, but I don't think this is it.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Stocks rally after Jerome Powell signals the Fed may slow down the pace of tightening as soon as this month. Still, Powell indicates more rate hikes are needed to fight inflation. Soaring mortgage rates take their toll in the UK. Home prices are now falling faster than expected. And disgraced FTX founder Sam Bankman-Fried makes his first public appearance since the crypto exchange collapsed. But he doesn't answer the question of where those missing billions have gone. Welcome to Bloomberg Surveillance, everybody. This is the Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, Powell said something suitably dovish enough, it seems, for those who wanted to find it, who were seeking it, in his comments yesterday.
Yeah, whether or not it really was dovish, Anna, that is definitely how the equity markets and the bond market took it. And you saw follow through from that in the Asian session overnight. Remember, we are coming off the best month, the month of November, for Asian equities, going all the way back to 1998. We're talking 24 years, and then they started a new month, December, on a positive note as well. The MSCI Asia Pacific Index as a whole up about 1.7%, with Chinese stocks up about 1% as well. Now, part of that is related to China-specific news. The country's top official in charge of the fight against COVID-19 saying they are entering a new phase in combating the virus, so really just reinforces optimism about the reopening of that economy and the softening of curbs. But the other overarching story is that Federal Reserve and the dovish-ish commentary coming out of Powell, at least saying that they will be slowing the pace of hikes. So that is leading the dollar to be weaker against pretty much everything in Asia and G10 today. And Asia is actually the South Korean won that is leading those gains among those currencies. It's stronger against the dollar by about 1.4%, just shy of 1,300. That is the strongest won going all the way back to August. And then in the bond market, after the big rally we saw in treasuries, some follow through from that in Australia and New Zealand overnight. In New Zealand, the 2-year yield down about 7 basis points to 4.55, Matt.
All right, take a look at what's going on here to kick off the month. S&P futures are absolutely unchanged, which is puzzling considering we have such movement in a couple of other asset classes. The 10-year yield right now at 361, so a really relatively low level. It's coming up a little bit in yield, but it had fallen by so much. And the Bloomberg Dollar Index continues to fall further at 1264. So these two things should really be a tailwind for S&P futures, for stocks kicking off the month, although maybe traders are looking at November and saying, hey, it was a great month in November following another great month. So we've had a couple of big positive months. Maybe we need to give up some of those gains. In any case, Bitcoin climbing back up over $17,000. Really interesting after everything that we heard from Sam Bankman-Fried yesterday. Maybe investors didn't think there were too many takeaways that would indicate more shoes need to drop beyond the Genesis and Gemini pair that we're already watching right now. But I think it's very interesting to see the continued strength in this cryptocurrency. Anna, what do you see in Europe?
Yeah, here in Europe then, Matt, we're actually off our earlier highs. We were substantially higher than this earlier on in the session. The DAX still clinging to those, up by 0.4%. The FTSE and the CAC, though, dropping down to the flat line, really reflecting the slight weakening that we've seen in US futures coming through, as Matt was just referencing there. If we have a look at some of the detail behind this, and this being driven by catch-up, of course, with the United States, trying to play catch-up with Wall Street yesterday, where we saw the NASDAQ up by more than 4% by the close, but also, as Kaylee was referencing, some of the at-the-margin reopening moves that we keep hearing about from China, all of that day by day having a bit of a positive influence on risk assets. This is the property sector for European equity markets, and we are seeing some of those risk-sensitive sectors doing particularly well. So property stocks up by 2.5% today. I've got a banking focus for you as well. Credit Suisse I put in just because it's such a heavy weight on the stock 600 and a weight downwards, down by 5.2% in today's session. And if it continues to lose ground today, that'll be 13 consecutive days in negative territory, which will be a record losing streak for the bank that has a number of issues. And we know all about those, of course. HSBC down by 0.9%. The CEO of the company has been talking. He's been confirming that, yes, he did consider breaking up the bank, but that wouldn't be the right path forward, the right course of action in his view. He's also responded to the potential for changing regulation around the banking sector in the UK, saying some of that would be welcomed. The euro against the dollar is up by 0.3%. Of course, this is very much the weakness in the dollar story, Matt, that you were just referencing, but the euro getting a boost from it and not being knocked off course by the fact we've seen some disappointing manufacturing PMI data, just underscoring the retrenchment that we've seen in the European economy, certainly the French data and the German data earlier on.
All right, of course, we're going to keep our eye on French business as the French president comes to visit President Biden in Washington today. Let's get back, though, to the markets and the Fed. Chair Jerome Powell is signaling the central bank will back off of its aggressive pace of raising interest rates this month.
For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. We anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, it is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy. Despite some promising developments, we have a long way to go in restoring price stability.
Valerie Teitel, Bloomberg Markets reporter, joins us now to break down the post-Powell rally. So, Valerie, what made investors bullish after this commentary?
Look, he repeated a lot of the same things that he told us at the last press conference, but the one thing that he kept out was there was no major pushback of the loosening of financial conditions that we have seen in between last night and the November FOMC meeting. And take no doubt, I mean, the loosening of FCON since that meeting has been significant. Bond yields have fallen, the dollar has weakened significantly, and equity markets have rallied, but yet Powell didn't talk this back. And that's one major difference. The Powell during the summertime, during July and August, he was very keen to always talk back any loosening of financial conditions, and he notably did not do that yesterday, and that is why the equity market took that in stride. Now, it's not just the equity market that's pushing trend lines, but it's also the dollar. They're both concurrently testing their 200-day moving average. It just goes to show that this has been a huge reversal in November of these key macro themes from this year. Stocks have really bounced the last 2 months. The dollar has fallen significantly, one of the steepest monthly drops we've seen in 12 years. And look, now that we know that the Fed is likely to go 50 in December, regardless of how this Friday's payroll print goes, regardless of how the CPI print the day before the FOMC decision goes, that's taken a lot of uncertainty out of the rate path. And I think that these moves could probably extend into year end, given that uncertainty is now off the table.
Okay, Valerie, yeah, maybe it was all about FCON. Maybe that was enough for the stock bulls. Valerie Teitel with the latest on what Powell said and how the markets received his message. Let's get back to the European economy and specifically the UK. The housing market here has had a tumultuous few weeks. Lizzie Burden has been taking a deep dive into the figures. Lizzie, walk us through some of the latest data, some of it coming, of course, this morning.
Yes, Anna, all the data point in the same direction, and that's that the UK is headed for a house price correction. We heard from Nationwide this morning. It said that house prices have fallen the most in November since the start of the pandemic, and if you ignore COVID, it's the biggest drop in growth since the financial crisis. We've also had data recently from the Bank of England this week. In fact, mortgage approvals have fallen to their lowest since the start of the pandemic, and Zoopla, the property portal, says that the gap between agreed and asking prices is its widest since January 2021. So what's happening here? We've got the perfect storm, because we've got rapidly rising mortgage rates, especially after Liz Truss's mini budget. We've got higher taxes, especially after Jeremy Hunt's fiscal statement, both of them feeding into the cost of living crisis. And where you've seen other asset classes, equities, bonds, rapidly adjusting to the new interest rate environment globally, in the UK, the house prices are only just starting to cotton on.
So what lies ahead then in terms of the continued drop, or does this look like the end of it?
Not quite, Matt. The Office for Budget Responsibility is forecasting a 9% drop over the next 2 years. There are some mitigating factors. We've got a very well-capitalised banking sector in the UK. The bottom third of households only hold about 5% of mortgage debt. We might not see as big a job shakeout as we have in other recessions. But history tells us that when house prices fall, they fall fast and rise slowly.
All right, Bloomberg's Lizzie Burden, thank you so much. Let's turn now to the world of crypto. The missing billions from the collapse of FTX are still a mystery. The disgraced founder of the crypto exchange, Sam Bankman-Fried, told the New York Times Dealbook Summit yesterday that he made a lot of mistakes. It was his first major public appearance since FTX imploded.
Whatever happened, wherever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators of the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. I was shocked by what happened this month.
He said it's been a bad month for him. Joining us now is Ana Herrera, Bloomberg senior crypto editor. Ana, what did we learn from that interview? Was there really anything new?
No, I think we were left with more questions, really, like namely what happened to the $8 billion that are missing, and what happened, why is there a hole? I think he sort of alluded to the fact that Alameda, his trading firm, had a big margin position on FTX, but he was unaware of the size of the margin, which then I guess begs the question why, if you were, the exchange giving the margin. But yeah, we don't really know. He did say, I guess he didn't willingly commit fraud. He wasn't trying to commit fraud, but it still leaves so many questions unanswered, like what actually happened.
Yeah, it seems like, I watched this whole interview while I was preparing dinner last night. It seemed to me like he said Alameda made huge bets with FTX money. leaving collateral at FTX. Then Alameda lost those bets, and the collateral became worthless. So it seems to me pretty clear that those billions are gone.
Yeah, the question is like, how much should he have known? You know, if the two firms are his, essentially, right? And I guess he was saying he was worried about, you know, conflict of interest, and that's why he wasn't involved with Alameda. But, you know, there's been different reporting over the past few weeks that show, you know, maybe there was more connection and commingling of funds. That was a big part of the interview. He was asked, was there knowingly commingling of funds, and he sort of said no, but then there were discussions about how Alameda's accounts were being used to transfer money into FTX in early days, which again raises even more questions. It sort of like answered questions, but really left us wondering, so like, what's actually going on? What should he have known? What did he know?
Right, the questions are less about where's the money and more about who holds the culpability, right?
Yeah, and I guess more will emerge during the bankruptcy proceedings for sure. And then we know there are investigations in the U.S., so I guess some of that will emerge, right? And he's still been talking. We haven't been hearing Alameda's former CEO, Carolyn, speak, so.
Yeah, Caroline Ellison, another important figure in this. We will continue looking for answers to these questions. Ana Herrera, thank you so much. And we'll continue to cover SBF and the FTX fallout on Bloomberg Crypto. You can catch that every Tuesday at 1 p.m. New York time, 6 p.m. in London. Now, though, let's take a look at some stocks moving in pre-market trading on this Thursday here in the U.S. A number of them related to earnings, including Salesforce, which reported after the bell yesterday. Disappointing outlook. Analysts saying that's really reflective of the softening macro environment. Plus, the co-CEO, Brett Taylor, is leaving the company, leaving just Mark Benioff at the helm. So that's a bit of a surprise. As a result, the stock down about 6.4%. It is also a drop after earnings for Snowflake. This is, of course, software company. It helps businesses organize data in the cloud, and the fact that their revenue forecast disappointed indicates that companies are slowing down their tech spending, their customers, that is. And as a result, Snowflake is down about 4.8%. I also wanted to check on some of those Chinese technology companies with listings here in the U.S. because those ADRs were roaring higher in the month of November. Alibaba had its best month since 2015. JD.com had its best month on record with a 50% rally last month, but they're starting a new month giving some of those gains back. Alibaba down about 2.5%, JD by about 2.75%, and Bilibili also down by more than 3% before the bell, Anna.
Okay, we'll keep an eye on those movers. Kaylee, coming up on the program, we'll talk to Carsten Bresky, ING's chief economist. What does he make of the comments that we got from Jerome Powell yesterday? And what does he make of the underlying weaknesses and points of weakness in the U.S. economy? We had some interesting data on that front yesterday, too. We'll get to Carsten on that. We'll also talk to Peter Trubowitz, Professor of International Relations at the London School of Economics. Matt was saying we'll keep an eye on French movements, and that's because the French President, Emmanuel Macron, is in Washington. There's a lot to discuss between Europe, the US, and China. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. Tomorrow, all eyes are on the jobs report.
Jobs report Friday is going to be huge.
It's the final stretch of 2022.
Is there actually going to be some change in the tone?
Wage data might be more important than the CPI.
Tomorrow, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market is stronger than people have thought it would be.
The recession is not here yet, but the check is certainly in the mail.
We're going into a downturn at full employment.
The November Jobs Report, tomorrow on Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us out of London. Now, we have seen the end of another positive month. The S&P 500 is up more than 5% after a big rally of more than 7% in the month previous. Do we have a chart? Did we look at the chart?
We saw the chart.
We saw the chart?
was there.
Yeah.
If you're listening on radio, you can find it on GTV Go on your Bloomberg terminal.
Thank you very much. Joining us now is Nora Melinda, Bloomberg equities reporter, to talk to us about what happened, why the big gains when it seemed like, it felt like it was a down month if you weren't looking at, HCP space M.
Yes, that's a really good point, and good morning. Thank you for having me. The S&P is actually on track to snap its longest quarterly losing streak since the global financial crisis in 2009. And of course, a lot of people are just looking at Powell's comments and analyzing that yesterday. I think that it's really interesting to note that despite the fact that we had more down days last month in November than we did have up days, the S&P still posted 2 consecutive months of gains the past 2 months, which I think is really noteworthy despite the fact that a lot of people have been having some negative sentiments, especially with everything going on with inflation.
So you say there actually were more down days than up, which means that the up days were just large enough to make the difference. Those are really big moves within this equity market. So a lot of volatility, it would seem. What is the VIX actually reflecting?
Yes, so the VIX is really interesting because, of course, we had earlier in October, we had a lot of volatility. We were seeing the VIX above 30, like the 30 handle. But now, as we're looking at the VIX, we're actually watching to see whether or not it will break below 20.
All right, so that's the story on the VIX. Good morning to you, Nora. Thinking about where markets go from here then, given what you've just painted, the picture of sort of low volatility and stocks have been doing well for the last couple of months or so, what are your sources saying will happen in December? It seems that traders will have some data and a Fed meeting to focus on. They can't just watch the soccer or the football.
Exactly. And as you mentioned, we actually do have data coming out later today. We'll be looking at PCE, which is the Fed's preferred gauge of inflation. And that doesn't quite actually include a close look at housing. So I think that typically the market will move on CPI more so than PCE. But given Powell's comments yesterday, I think that that's something that we'll actually be analyzing today. As we're looking forward into the month of December and closing out the year, if the S&P were to maintain its current momentum, it has the potential to post its first, it has the potential to post a really great month and end these past 3 months in a great quarter.
Yeah, potential for a Santa rally then. Nora, thank you very much. Bloomberg's Nora Melinda joining us with the latest on the markets. And for more market analysis, check out MLIV Go on the Bloomberg Terminal. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. 3 years since the world's first documented coronavirus patient in China, and the country is finally pivoting away from efforts to quash the pandemic. China's COVID czar says the fight has entered a new phase, and the government is making some concessions, such as allowing some low-risk patients to isolate at home instead of in controversial quarantine camps. Key European Union members are looking at a compromise on a Russian oil price cap. Bloomberg's learned they've discussed a $60 a barrel limit to help reach a deal with the EU's wider membership in the broader Group of Seven. The goal is to keep Russian oil flowing to avoid a global price spike while limiting Moscow's revenue. A standoff between Twitter and Apple appears to be easing. Elon Musk met with CEO Tim Cook at Apple's headquarters. Afterwards, Musk said Cook told him Apple had never considered removing Twitter from its App Store. Musk began criticizing Apple after the iPhone maker reduced its advertising spending on the social network. And when France's President Emmanuel Macron dines at the White House tonight, the menu will include lobster, caviar, and an Oregon cheese named the best in the world. It's President Biden's first state dinner since taking office. Yesterday, Macron visited NASA and met with U.S. veterans. And the name of that Oregon cheese, Matt, is one I honestly have never heard of, even though I've been to Oregon and am an American. And it was the only U.S. cheese to ever win the World Cheese Award, Oregon's Rogue River Blue.
I also have never heard of that, and I don't know how you can judge the best cheese in the world. Are there definitive metrics? Anna, you're the cheese fan, so what makes one cheese that much better than the other?
Well, I'm sure you should ask the Fine Food whatever organization that announces this award. I do think it's a brave move by the White House to present the French president with a cheese deemed to be the best in the world. I imagine he might have a few views of his own to share. I was amazed by the menu. Maine lobster, American caviar, ravioli, steak and potatoes. I mean, this sounds like about 5 meals, not just one, but I'm sure they'll all enjoy it.
And there's
coming up on the
policy
program,
to
we will.
discuss.
Yeah, absolutely. They have a lot of policy conversation to fuel. We'll actually pick up on some of that because there's a concern across the Atlantic around trade and protectionism. How much does that weigh on the mind of Carsten Breschke? He joins us next. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Nugent Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Stocks rally after Jerome Powell signals the Fed may slow down the pace of tightening as soon as this month. Still, Powell indicates more rate hikes are needed to fight inflation. Soaring mortgage rates take their toll in the UK. Home prices are now falling faster than expected. And disgraced FTX founder Sam Bankman-Fried makes his first public appearance since the crypto exchange collapsed. But he doesn't answer the question of where those missing billions have gone. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, European equity markets were trying to rally following what happened on Wall Street post-Powell, but the effect of that seems to be fading a little bit as we get towards the start of US trade.
Yeah, it doesn't seem to be phasing at all. Maybe traders just put a complete reset button after November and to kick off December because we're doing nothing on futures. Now, it should be said, we had a pretty great November. I think we were up 5.4% on the S&P in November. We were up 7% and change on the S&P in October. So 2 consecutive months of big gains, and maybe that's why you don't see a lot going on in futures today. But we have very low 10-year yield compared to the high that we saw a month ago, right? We were at 420. A little bit more than that, and right now we're at 361.63. It's coming up a little bit, but not enough to really write home about. And we have a very low Bloomberg dollar index, right? We were at 1350, now we're at 1264. And so those things, that pressure coming off should allow equities to rally further, although maybe that's what we saw already priced in the last couple of months. I also think it's fascinating to see Bitcoin now climbing back up over 17,000. And for those of you who watched yesterday the Sam Bankman-Fried interview with Andrew Ross Sorkin, I thought it was pretty clear that he said the money is gone, right? I mean, Alameda made some huge bets with collateral that then became worthless, and Alameda lost those bets. So those billions are out of there. The question is, who's responsible for it, and why, in that case, do we see Bitcoin continuing to rise as we worry about now the next shoes to drop, be it Genesis or Gemini, as we try and figure out what happens there, Kaylee?
Yeah, I mean, didn't Larry Fink at that same conference say he expects that most crypto firms are ultimately going to collapse in the wake of it? So definitely interesting to see such stability for the biggest cryptocurrency out there. Now, we also, as you mentioned, are seeing relative stability in the future session because a lot of those heavy hitters that led the gains yesterday, the big tech stocks, aren't really coming to play ball on this Thursday morning, the first day, as you said, Matt, of December. The likes of Tesla and Apple down in pre-market trading by 0.8% for Tesla, 0.4% for Apple. Much bigger moves, though, for two companies that reported earnings after the bell yesterday and gave disappointing disappointing revenue outlooks. Salesforce, one of them, softer macro environment, likely to blame for that. Plus, the company's co-CEO, Brett Taylor, is leaving, so just Mark Benioff is going to be leading the charge. That stock is down 6.5%. And then Snowflake, the software company, organizes data in the cloud for businesses, also disappointed, signals that there's just not as much technology spending going on the customer side right now. So Snowflake down about 5.25%, Anna.
Yeah, that's an interesting one, given the sector is already shedding jobs, as we know. Kaylee, this is what we see in Europe then. Actually managing to eke out gains here in Europe, more than that perhaps, up by 0.7%. But it's certain sectors that are doing well today. It's not the likes of energy. That was the story of days ago. But the property sector doing pretty well today. So rate-sensitive sectors on the rise, up by 2.4%. HSBC I put in because we heard from the CEO a little bit earlier on, and he was speaking at a conference saying that, yes, he had considered breaking up the giant business that is HSBC, but decided it's not in the interests of the business. This was something that one particular shareholder had been pushing very vocally for. He also welcomed the talk about some changes to regulations here in the UK and weighed in on Chinese-US geopolitics, saying that the recent meeting was promising. This is the euro, 104.38. To Matt's point, though, we see a lot of dollar weakness, not necessarily really euro strength today, but the euro is up by 0.3%, despite the fact we had some disappointing data when it comes to manufacturing PMI from certain countries in the eurozone, certainly some of the larger countries, and really underscoring the headwinds that eurozone economies are facing, and certainly the PMI data suggesting we're in contraction already.
Do you know, I think sometimes we come on this early in the morning, at least for us, Anna, and we talk about futures, but we don't always shed a lot of light on what happened yesterday. And we should on a day like today, when yesterday's rally was so strong in the U.S., in U.S. stocks, right? We saw a more than 3% gain on the S&P 500. We saw the Dow Jones Industrial Average adding 737 points after Jerome Powell gave his speech at the Brookings Institution in Washington, D.C., and kind of confirmed the step down for us. Let's talk about why that may have been the catalyst for such a big rally. Joining us to discuss is Carson Bresky, ING DIBA chief economist. Carson, you know, why did those comments from Powell, essentially saying we're still going to see 50 basis point rate hike at the next meeting, which in a normal world is a lot, why does that drive a 3% rally on the S&P?
Well, this is not a normal world, Matt. We know that. Just remember a couple of weeks ago when U.S. inflation was 7.7% and the market was also cheering, while the market probably six months ago would have been really extremely painful. So this is just that the end of Fed rate hikes is coming nearer. The sheer fact that the Fed will really slow down the pace of rate hikes is such a support factor for equity markets right now, because markets they feel confirmed in the speculation that the near of rate hikes is coming closer, or the end is coming closer.
I wanted to ask you about the underlying picture, Carsten, for the U.S. economy and how quickly we get to a recessionary picture, if that's where you think we're going in the U.S. I saw yesterday, I mean, the Chicago PMI data yesterday, taking some people by surprise, looking really weak, coming in below 40. And one of our colleagues on the Markets Live blog saying it only does that when we're either in recession or we're just coming out of a recession. So it certainly doesn't tell a positive story. What are you seeing in the sort of high frequency data that you look at for the U.S.?
No, we're clearly seeing the slowing down of the U.S. economy, and we still have a recession penciled in for the first half of next year. And we do see that, for example, pricing power by corporate is coming down. We see that demand is coming down by consumers because of high inflation. And we'll also see that the real estate market is clearly slowing down, with mortgage rates north of 7%.
Right, okay, and that's what you're watching in the United States. And clearly the US government wants to do things to support the economy, just like many other governments do around the world. One of the things they've been doing is the Inflation Act, and this has annoyed some people in Europe, certainly some politicians, some companies that manufacture. I wonder how substantial you think this argument around trade is going to be, because we have Emmanuel Macron, the French president in the United States. Are we talking about a period of concern about protectionism, or would that be too strong?
No, it's not too strong. I think this is pretty much what it's going to be about. We know since the 24th of February, when the war in Ukraine started, that the U.S. will somehow economically benefit because the U.S. is a net exporter of energy. Europe is a net importer of energy. So this was already kind of shifting the balance between the US and Europe. And now with this Inflation Reduction Act in the US, so there will be more kind of support for the US economy while Europe is facing this recession coming up. So clearly this is a protectionist story. And yes, Europe is, as so often, waking up quite late. Macron now being in the White House.
And it's protectionist because of the support being provided for sort of buy American? Is that what the argument is about?
It's for buying American. It's for producing in the US. So this is clearly supporting the production factor or the production location US.
Can I just jump in here and point out that a lot of this is about cars, right? I was talking to Anna and Kaylee about this before the show. Emmanuel Macron is French. We should remember, he's the president of France, right? We don't buy any Renaults, Citroëns, or Peugeots here. The only French car you can buy in America is a Bugatti. So it's the Germans, Carson, that should have a real issue with this Inflation Reduction Act.
Yeah, correct, but maybe it is that Macron is kind of the messenger for Olaf Scholz, because you're fully right that it is the German automotive that will suffer more and most from this Inflation Reduction Act. But yeah, we know this. Europe very often likes to speak with several voices, and I think it's now Macron trying to have the first discussion with Joe Biden on how we can really avoid a trade war or kind of more protectionism. I wouldn't call this a war, but more protectionism between the US and Europe, just in a time in which actually these two regions need each other.
Okay, so Carsten, that's trade between the U.S. and Europe. There is also the very large China question, which seems to have been at the forefront, at least over the month of November. What are you actually modeling in terms of the growth and the demand the Chinese economy realistically is going to contribute to the global economy in 2023?
Well, that is a very tricky one, Kaylee. It's what we're seeing here is actually we have two ways forward. So either the Chinese government is really lifting the COVID restrictions, so getting away from zero COVID, which then should be beneficial to the global economy, while on the other hand, it would probably also push up energy prices and then would hit Europe via the energy price channel. On the other hand, if zero COVID remains in place, and I think we will see more lockdowns, we will see more supply chain frictions, and that will clearly be negative for the global economy. I think in total, you could argue that China will clearly not be this big push factor for the global economy. It has been a couple of years ago.
Okay, but it could be potentially an upside driver of inflation, Carsten, through the energy and commodity mechanism. So as we kind of think about inflation and the realistic trajectory of it going down next year, it's one thing to talk about the Fed that is going to slow down the pace of rate hikes and then ultimately end up at terminal. It's a completely separate conversation to talk about when they realistically could start cutting. Do you see any real probability that that time could come next year?
Yeah, it's not consensus, but we do see that there could be a moment after the summer at which the Fed will start cutting interest rates again. Why is that? Because we expect inflation in the US to come down much faster than people currently expect. 1/3 of the inflation basket or index in the US is driven by real estate, by rents, by shelter. And with these high interest rates, I think it is normal to expect that this portion of the inflation index will come down significantly and then push down headline inflation, which should allow the Fed to start cutting rates again after the summer next year.
Yes. Carsten, thank you very much for your time. Carsten Bresky of ING Germany. I think I know who that was. Right, coming up on the program, we'll talk geopolitics, transatlantic geopolitics. We'll also talk about China, how that gets into the mix in those transatlantic relationships. We'll talk to Peter Tuberitz, LSE Professor of International Relations. He joins us shortly. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, obviously today we are having our eyes on the White House, where a fancy state dinner with all sorts of fancy foods is going to be taking place between President Biden and French President Emmanuel Macron, who is in Washington. It is the first state dinner that President Biden will hold under his administration, but it does come at a time where there are contention points between the U.S. and its oldest ally. Joining us now to discuss is Peter Trubowitz, Professor of International Relations at the London School of Economics. So, Professor Trubowitz, thank you so much for being here. Obviously, the U.S. and France have long been friends and allies, but there are points, whether it be China, whether it be the Inflation Reduction Act and some of the benefits toward American EVs that we were just discussing in our prior block, there are issues. How would you characterize the health of the relationship between the U.S. and France as these two meet?
Good to be with you, Kelly. I think, as you pointed out, this is America's oldest ally. There's a lot of history, many ups, some downs as well over time. Certainly, the decision that was taken, the AUKUS decision a year ago, caused trouble in the French-American relationship. But I think it's a pretty strong relationship right now, and both sides are working hard. They have incentives to work hard to keep the bonds strong. You know, I think there's two things about this visit that are notable. First, the nod that goes to a European. I mean, given all the talk to a European ally, given the administration's very heavy focus on China in East Asia, it's notable that it goes first to Europe. And when it comes to Europe, I think the thing that people need to keep in mind here is that Biden needs a really reliable interlocutor on the European side to negotiate out differences on Ukraine, on China, and other matters. And right now, given the uncertainty about political leadership in Britain, in Germany, and Italy, I mean, it's really not a surprise that Macron is the one they're going to. In fact, I think the hope in Washington is that Macron, who cannot run for re-election again in France, will have more flexibility politically than these other European leaders to work with the United States.
Why? Well, I mean, first of all, in Italy, there is never anything but uncertainty in terms of their leadership. But in Germany, you know, there's hardly a vast chasm between the SPD and the CDU. I would say they're pretty stalwart. Why not have the Germans be, as they historically have been, our best friend in Europe?
Well, that's the question. How come they didn't go to Schultz first? And I think the reason is because they don't think that Schultz is showing the leadership that Macron is. Macron is on top of, you know, is out front on a lot of issues. Americans disagree with some of the things that he does and some of the positions that he takes, but there's a clear, there's energy that is coming from Paris, and I think they see him as probably the best bet in trying to reconcile differences, whether they be over Ukraine. There's some distance, and we can talk about that between the two sides. Clearly over China, and the Germans have been a problem for the United States on that. You know, and on the trade issue, in some respects, Macron is probably their best bet in trying to negotiate out something.
Right. Good morning to you, Professor. So is there some sort of deal to be done on these two subjects of Ukraine and trade? The United States wants more support from Europe in fighting, in money for fighting, I should say, in Ukraine. The Europeans want some softening of the Inflation Reduction Act in the United States. Is there any kind of trade to do on those?
Well, I think what the, maybe, but I think probably what the Europeans want most proximately from the United States is some reduction in the cost of natural, you know, liquid natural gas exports, you know, which have, I mean, the prices have surged in Europe due to the cancellation of Russian deliveries, Putin's sabotage, you know, of the gas lines and so on. And so I think if there's a deal that is struck, it will probably be between, you know, a larger military commitment from Europe. And again, the Germans have been a problem here, but the French less so, in return for some relief on gas. I think the question that you're raising on Biden's tax incentives, that, you know, the incentives that come with the Inflation Reduction Act, I mean, that's a huge issue right now, getting a lot of oxygen. I wouldn't look for an agreement, a deliverable on that. I'll be surprised. Maybe it happens. I think what's more, you know, through the meetings today and in tomorrow in Washington, I think what's probably more likely is that they're able to set the table in a way for negotiations that will actually begin as soon, lower level negotiations next week, to see whether or not there's some play in how the subsidies are defined. Right now, they're defined broadly for North American, you know, firms that they deal with both the United States, but they cover also Canada and Mexico, and whether the Treasury Department can expand that. But the question, it seems to me, is what does the United States get in return? You know, if it does cut some slack, and there, I might look for a little pressure being applied to Macron over Europe's stance on China. The United States wants Europe to close ranks.
Yeah, and we just heard from the EU's Charles Michel, who's actually in China right now, reiterating the EU's commitment to the one China policy, perhaps a little less ambiguous than the United States position. I wonder if that will be brought up. Peter, thank you so much for joining us. Peter Trubowitz joining us from the London School of Economics. Coming up today on Balance of Power, Senator Rick Scott joins the team, Republican from Florida. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become chief future officers. The cruise industry shut down during COVID. Now, CFO Naftali Holtz has Royal Caribbean full speed ahead.
Our goal is to get back to the balance sheet we had. This business is very resilient.
Watch Chief Future Officer, Wednesday on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Now, let's have a look at what is ahead today. We'll get some U.S. economic data. That'll include U.S. initial jobless claims and the PCE deflator report, favored by the Fed, of course. At 10 a.m. Eastern, CFTC Chairman Rostin Bayman testifies on lessons learned from the FTX collapse. Maybe we'll learn more today than yesterday. More Fed speak today, including a speech from the Fed Vice Chair for Supervision, Michael Barr. Will there be any pushback on market response to yesterday? And French President Emmanuel Macron, we talked about this already, heads to the White House. We'll have a joint press conference with President Biden at 11:45 Eastern and a state dinner at 7 p.m. serving, well, all kinds of things. Seems like every food group you could imagine, including a cheese from Oregon that once won the award for the world's best cheese. Matt?
Probably not a French award, right? I'm assuming, we keep saying that it was awarded best cheese in the world, and I'm guessing that was an American judge. All right, let's talk about, well, a guy who used to run a French auto manufacturing company, now back at his previous post as the head of Lamborghini, Stefan Winkelmann. Lamborghini just unveiled the latest version of its $270,000 Huracan supercar, the Sterrato version of that car. Takes drivers off the highway just slightly onto some dirt or gravel road. I spoke with Winkelmann about what else is in the pipeline at Lamborghini.
We are the super sports car factory with the Huracan and the Aventador Polo is now changing a lot. We are building a new assembly line, which when the new Huracan as a hybrid is coming at the end of 2024, will not be two as it's today, but there will be then one line which is being able to produce both of the super sports cars. By the beginning of next year, actually, we will have a last incredible surprise on the V12 engine only. There will be a very nice announcement, which I will not anticipate too much, but in January we will do a big announcement about a single car, which is going to be phenomenal, and this is then still based on our actual V12 engine.
All right, so very cool to hear more about the trend to Safari, a sports car. It has been done with the 911 for years. They made it official last month with the Dakar version. Now Lamborghini's doing it. I hope Ford and Mustang are the next to do it. But also interesting to hear that Lamborghini is going to completely shift the production line, Anna, to produce EVs. So they want to squeeze out as many special editions of their gas cars as they can before they do that.
It still looks too fancy for a campsite, is all I can say, but I'm sure somebody will take it there, Kaylee.
Yeah, well, and Matt brought up potholes in the interview, and that's something to consider as well. You don't have to go out to the desert. That wraps it up for Early Edition. More surveillance is ahead with Tom, John, and Lisa. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Central banks are not going to go all the way to fight inflation to bring it down to target.
We don't necessarily think the path to a soft landing is completely closed either, but we do think it's getting narrower.
The supply side on inflation is not fixed. The Fed knows that, and they're going to be keeping things tight.
I think you have to take that as a signal that they're willing to do more rather than less.
The biggest concern is that inflation's been around for long enough that it's become entrenched in the labor market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Closed out November with a bang. Hello, December. Live from New York City this morning. Good morning, good morning.
Cash feels great right
For
now.
our audience worldwide on TV and radio, this is Bloomberg Surveillance with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures this morning just about unchanged on the S&P. TK, Chairman Powell, triggering a massive rally in yesterday's session.
You and Lisa were talking before we went live here about the oddities of yesterday. They were sort of down, and there was down, 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 whatever the reasons are, and then boom, up we went. And the real question is, was it a short cover, the people, you know, betting on gloom in the market, saying, oops, I got to get out, or was it more than that? John, I'm looking at green on the screen. The Dow Jones Industrial Average, 12 months trailing, is a positive 0.31%.
Wow. Big, big move over the last couple of months. I'd make 2 points. One, it's what he didn't say, and what he chose to emphasize. What he didn't say, he did not lean against the easing of financial conditions we've seen over the last month. 1, 2, what he chose to emphasize. If you go back to the November news conference, the Fed chair talked about asymmetric risk. He thought the risk of doing too little outweighed the risk of doing too much. He talked about higher terminal rates in our future. And then yesterday, for some reason, he started emphasizing the risk of over-tightening, and that decelerating interest rate increases were the tool to manage that risk. I found that kind of bizarre, the shift in emphasis from the November Fed meeting to what we heard from the Fed chair yesterday.
The market didn't find that odd. They said game on. That means that you didn't push back against us. And guess what? You might be concerned about perhaps creating a real downturn in the economy. He's trying to be nuanced at a moment where the market is not nuanced. He's trying to be nuanced in a market that's looking for him to cut rates and to signal that he is open to that next year. They are going to hear that in even him saying something else. Andrew Hollenhost over at Citigroup completely disagreed with the Dovish interpretation and says that, honestly, this just sets the market up for more volatility in the face of the labor market report that we get tomorrow.
I think it's separate from the Fed. I think it's the earnings guess. Gina Martin-Adams yesterday was great about what is the earnings guess, what is the margin guess, and the backdrop is good nominal GDP and the story not being reported this morning, which is the opening of China. Renminbi is coming. John, you've mentioned the dollar move. Renminbi is very near a critical strong yuan breakout, which will signal that reopening.
Just a slight easing of curbs in places like Beijing, Bramo, just feeding the enthusiasm of the last month or so. It's not just US equities. We talked about Europe Europe. I think the Euro Stoxx 50 is about 20% off the lows of September.
I didn't know that.
And we got more yesterday with officials out of China moving away from talking about any kind of COVID zero anything. So how much do you end up with a real reopening, especially as they emphasize vaccinated?
I just want to say in the history of Bloomberg surveillance, John, I mean, the way you read in on that, because you weren't watching Powell yesterday, you were watching Messi. John was watching Messi.
I had two screens up, to be honest with you.
I'm sorry.
Once it got through 2 p.m., I started to get pretty annoyed with Chairman Powell. It's like, wrap it up. Let's go.
I actually had
Let's go.
two screens up, and they were the Mexico, Saudi Arabia, and the Argentina.
I was taking the surveillance naps.
I'm sure you were. Tom slept through Chairman Powell and the football. Futures right now on the S&P are down about 0.1%. Let's whip through the price action quickly. In the bond market, yields on a 10-year down aggressively through the month of November. Down a little bit this morning to 360.16. Euro dollar with a 104 handle. Tom 104.22. Positive a little more than 0.1%.
Yeah, spread comes in negative 75 basis points. It's a little movement off the inversion gloom there, but I'm going to go again to Bloomberg Financial Conditions Index, which is still very accommodative and certainly did not move restrictive on the Powell comments that Hollenhorst brings up.
But just to wrap things up, Bramo crude $80 and about 90 cents this morning.
Yeah, definitely a question mark around the reopening of China, fueling the very unclear picture around oil. Today, what I'm looking for, 8:30 a.m., the data dump includes jobless claims, personal income, and consumption, as well as the PCE deflator. This is the key inflation metric the Fed traditionally has looked at. And what you have seen is actually an increase in core PCE, which isn't exactly what the Fed wants to see. How much does this cause a reversal in some of the enthusiasm we saw yesterday when suddenly the data doesn't necessarily bear out the hope that certain Fed officials have for a soft landing? Today, Fed Speak includes, my God, this is a reality television show. Dallas Fed President Lori Logan, Fed Governor Michelle Bowman, Minneapolis Fed President Neil Kashkari, and Fed Vice Chair for Supervision Michael Barr. I'm actually most interested to hear what Michael Barr has to say about overseeing certain financial institutions, especially after the FTX debacle that was really kind of reinvigorated in terms of the debate with yesterday's discussion with Sam Bankman-Fried. And then also today, France's Emmanuel Macron comes to Washington, D.C. and joins for the first White House state dinner in more than 3 years. Is there some sort of coming together when it comes to trade policy, when it comes to countering inflation that doesn't necessarily hurt other regions? Does this alliance come closer, John?
Lisa, thank you. Looking forward to catching up with Anne-Marie in about 10 minutes' time. Joining us now is Ben Laidler, Global Market Strategist at eToro. Ben, the world is coming towards you, this bullish view, this constructive view. Ben, walk us through the reasons why you think this rally through October, November can continue into December and beyond.
Yeah, I'm a little bit cautious on the pace, but absolutely not on the direction. I do think that the low is in. I think corporates and consumers have been incredibly resilient, and I don't think that resilience is done. And we're seeing both inflation beginning to come down, importantly, the reported numbers, but maybe more importantly, from all those lead inflation indicators, even things like the sort of sticky labor market and housing market, I think are all well off their highs here. We're beginning to get visibility on the top of this Fed cycle over the next few months. Valuations have come down, maybe not quite as much as we would like in the US, but to your earlier point, I mean, really dramatically overseas. And that's really where I think the action has been in this big rally off the October low. And when sentiment's this negative, you don't need good news. You just need a little bit less bad news. And I think that's going to keep coming.
I like the green backdrop, Ben. It speaks to your optimism since Christmas of 2018, where you've nailed 3 bull markets in a row. What we see, Ben, is the bears rationalize. That's what they're doing. The excuse is it's one big short cover, but what is there more than just the obvious short cover?
I think we've seen this. The fever is breaking on inflation. We can have a debate about how quickly it's going to come down, but show me a lead inflation indicator which is moving in the wrong direction at this point. The catalyst for the next bull market is when the Fed actually starts cutting interest rates. We're a long way from that, but the necessary step one is they stop hiking, and that I think is the relief that you've been seeing right now. But again, this is not just about the US. You touched on it earlier. I mean, the rally has been dramatically bigger outside the US. The gradual reopening of China, the support to the property sector, the less bad news out of Europe, the peak in inflation in Europe, the lower natural gas prices in Europe, and profit margins are lower there, valuations are lower there. So that, I think, is, unsurprisingly what's been leading this rally. So this is not just about the US. I think this is increasingly global.
How fragile is your view, Ben? If there's a cold winter, let's say, in Europe, does that shift completely your view in terms of how much this rally can continue?
There are plenty of headwinds in Europe. I mean, it's going to lead the downturn next year. The sort of strength in the euro doesn't help corporate profitability. Gas prices are probably going to go up again. I mean, but those are negatives that we all know. That is why Europe is on 10, 11, 12 times earnings. But the corporate's incredibly resilient. We've just closed out third quarter earnings. European corporates, ex-energy, grew revenues 20%. It's dramatically more than the US. So we all know the problems in Europe, but I think what we often underestimate is just the buffers that they have there, whether that's the euro, whether that's fiscal policy, how well they've navigated this crisis so far, and how cheap those valuations are. And I think this 20% rally off the bottom is, I think, just a reminder of that, which I think we'd be wise to take on board.
The number one challenge to your call right now is Q1 earnings, or rather Q4 earnings reported in Q1. Ben, this is even from JP Morgan's Marko Kolanovic, who's in line now with Mike Wilson and Morgan Stanley for what they think they're going to see in early 2023. And I'll read you a quote from the team. And Ben, I'd love your response to it. Previous lows in equity markets are likely to be retested as there may be a significant decline in corporate earnings. We're inclined to think that this market decline could happen between now and the end of the first quarter of 2023. Now, Ben, increasingly, that is overwhelmingly the consensus view. The consensus view is corporate earnings are about to get hammered and this equity market's about to roll over. Ben, what's the argument against that?
Well, simplistically, the fact that everyone's talking about it, right? So at least some of it's sort of priced in here. But yeah, point well taken. I think next year is going to be the opposite of this year, right? This year was all about valuations coming down and earnings hanging in there. I think next year is going to be some valuation relief as we get to as inflation comes down and we get to the top of the Fed cycle, but earnings coming under more pressure. So I think you're going to make money in different places. But the surprise so far, which I don't think is done, is how resilient corporate earnings, have been, and how resilient the consumer's been, and how resilient the U.S. economy has been. Fourth quarter U.S. GDP is going to be 3 to 4%. Right, we're re-accelerating here. And why are we re-accelerating? Because inflation's starting to come down, and consumers are getting a little bit of that purchasing power back. I don't think we should forget that. If inflation keeps coming down, and in parts of the world like Europe, it could come down even quicker with lower energy prices. So again, I'm not that. We all know that earnings are coming down, and they're the weak link. I'm not sure they're going to come down quite as much as people think, and we're going to get some relief from valuation.
Hey Ben, great to get your perspective. Looking for another move higher here in this equity market and pushing back against some of the gloom. Ben Lader there of eToro. In line, Tom, I've got to say, with what we heard from Neil Dutter of Renmac yesterday on this program, looking for that re-acceleration in the economy.
It's really important, the distinction between a market economist and a market strategist. Both of them have been dead on in their optimism here. What thunderstruck me there in the comments was EU ex-energy revenue growth of a solid double-digit up, and that goes to the nominal GDP question. Yesterday's economic growth was a 7% plus nominal GDP. It's easy to make money in that if you're profitable.
First back-to-back monthly gains, at least of the year, October and November.
Yeah, we had monthly gains, triple leveraged all cash.
You've been doing well, have you?
Yeah.
I'm talking about the equity market,
the
S&P.
And you're talking about rationalizing with the bears. Can this continue if we get out of cold weather in Europe or
something? Should make it Marco now on the same page as.
What is that about?
The ultimate bull signal. That's basically what people are saying.
We could discuss this morning. Equity futures unchanged from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Federal Reserve Chair Jerome Powell is signaling the central bank will back off its aggressive pace of raising interest rates this month. In a Wednesday speech, Powell also made the case for lowering inflation without sending the economy into a deep recession. Fed policymakers meet for 2 days starting December 13th. The missing billions from the collapse of FTX are still a mystery. The disgraced founder of the crypto exchange, Sam Bankman-Fried, denied he was behind a fraud. Still, he told the New York Times Deal Book Summit he made a lot of mistakes. It was his first major public appearance since FTX imploded November 11th. 3 years since the world's first documented coronavirus patient in China, the country is finally pivoting away from efforts to quash the pandemic. China's COVID czar says the fight has entered a new phase.
And the government is making some concessions, such as allowing some low-risk patients to isolate at home instead of in controversial quarantine camps. Key European Union members are looking at a compromise on a Russian oil price cap. Bloomberg's learned they've discussed a $60 a barrel limit to help reach a deal with the EU's wider membership and the broader Group of Seven. The goal is to keep Russian oil flowing to avoid a global price spike while limiting Moscow's revenue. And a standoff between Twitter and Apple appears to be easing. Elon Musk met with CEO Tim Cook at Apple's headquarters. Afterwards, Musk said that Cook told him Apple had never considered removing Twitter from its App Store. Musk began criticizing Apple after the iPhone maker reduced its advertising spending on Twitter. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
Can't seem to get enough of Prada. Loafers, nylon bags, and its Miu Miu micro miniskirt have been flying off the shelves into and onto the arms of young consumers. Fashion tech company Lyst placed Prada second on its fashion index at its highest ever ranking. So what could be making this over a century-year-old fashion house appealing to a new generation of consumers?
What Prada has navigated adeptly is their overall kind of understanding of how cultural conversations are happening online, their ability to partner with various cultural figures.
Gen Z faces are at the front of Prada's advertising to this new market. Maya Hawke, Hunter Schafer, and Sydney Sweeney will be familiar to any fans of Stranger Things or Euphoria. There could be another factor at play, the environment. Of those surveyed by The Lancet, over 59% of Gen Z said that they were extremely worried about the climate crisis. So, for example, the revival of Prada's iconic nylon handbag using eco-friendly materials may be winning kudos among these shoppers. Of course, Prada and Miu Miu are not inexpensive brands, and as the global cost of living crisis hits, these brands might start to feel a pinch. But, for now, Gen Z seem to be reaching for their nylon handbags and not letting go.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. To
Tomorrow, all eyes are on the jobs report.
Jobs report Friday is going to be huge.
It's the final stretch of 2022.
Is there actually going to be some change in the tone?
Wage data might be more important than the CPI.
Tomorrow, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market is stronger than people have thought it would be.
The recession is not here yet, but the check is certainly in the mail.
We're going into a downturn at full employment.
The November Jobs Report, tomorrow on Bloomberg Television and Radio.
The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation.
Chairman Powell opening the door for this equity market to absolutely rip in yesterday's session and close out November with another big monthly gain. From December, live from New York, good morning to you. Here's the price action on the S&P 500 this morning. Equity futures basically unchanged, negative 0.1%. Yields lower through November as we kick off December. Yields unchanged on a 10-year, 359.98. Euro dollar just about reclaiming 104, Tom. 104.29 in the last 24 hours. We get back up to that level, positive 0.2%.
Jordan Rochester to join later from Nomura. What do you talk to him about? Which pair matters, right now?
What went wrong with some of these FX calls? Because things turned around brutally quick. We went from 103.50 on cable, Tom, end of September through 120 just a couple of months later.
I don't give opinion, but I will say this. I did a lot of technical studies of BBDXY and DXY this morning, and all of a sudden they really have a persistent southedness to them.
Let's just say a lot of people got caught offside with the FX trade in the last couple of months.
They are like one of the BBDXY folks is teach a course. It's so technically wonderful. Also wonderful is Anne-Marie Horton, Bloomberg Washington correspondent. She missed Paul yesterday watching Argentina, which is I guess what you'd expect, but she did not miss the rail strike of this nation. It is upon us. It's something from another time and place. Anne-Marie Horton, I'm looking at the Senate, as is the Secretary of Labor. John Farrell will speak to Mr. Walsh here on Friday after the jobs report. Marty Walsh is looking for a path forward. What is the path forward for the Senate?
Well, given the fact that the House cleared this on a bipartisan vote, it does look like the Senate could clear this as well, potentially could clear it as soon as this week. The bigger issue is whether or not this provision on sick leave that the House voted after the legislation. They didn't include in the tentative agreement that they want to make legislation. They voted on it as a provision. And the issue with that is that only 3 Republicans voted for that. So that just sets the tone that that sick leave provision may not get the votes it needs in the Senate, except you have Senator Sanders who's demanding an up or down vote, yay or nay, on sick leave be included, or he will not sign up for that tentative agreement to become legislation. And you also have the likes of individuals like Senator Rubio. You never really see these two on the same side saying that he's for the workers' rights and that he doesn't want to vote for anything that the workers don't agree with. So there is potential for that, but that's where it's going to get tricky.
Why aren't they doing this like if the airlines are on strike or the postal workers on strike? I don't get what's unique about a rail strike versus 10 other critical industries.
Well, it is a good question. We don't normally have these moments where it's down to the wire, in essence, that the strike will happen if this agreement is not in place and Congress does not act. Like you said, Tom, this is something of another era, and this will happen potentially on December 9th. But what the issue have right now is that companies are actually starting to shift things around, not putting them on railroads, because there is concern that this is going to come to a stop, especially when you think of issues like hazardous material that comes from refineries that go on railroads. These kind of materials, these kind of products cannot get stuck, because then you'll have much bigger issues.
In the meantime, President Biden is eating at Fiola Mare in Washington, D.C., sharing a $120 seafood tower with Emmanuel Macron last night. What did they talk about? Do we have any sense of how things are going?
And you can ask John what he thinks about that restaurant.
I will.
I took him there
shortly
once when he visited Washington.
Listen, take me.
Yesterday, Tom, we all know you only go to the Hay Adams. Listen, or Ben's Chili Bowl. Yesterday for
There's no
Macron
difference.
and Biden, it was all smiles when the president tweeted out a photo that he has these friends in town, and it's the dinner before the main dinner, a little bit more of an intimate setting at some place the Bidens like to go to. But obviously, today is going to be this bilateral meeting, and then there's going to be a joint press conference, and trade tensions are the main concern. Emmanuel Macron has called the subsidies that the Inflation Reduction Act will give to clean energy companies, give to EVs. He says it's unfriendly policies, i.e. protectionism. And then you also had his finance minister equating it to what China does. So there's some real friction and tension here. But, you know, Macron will likely say, I'm going to be frank with an ally, and America's oldest ally. That's us. That's France.
What does the U.S. want from Emmanuel Macron? What is President Biden going to be asking for?
I think right now what the Biden administration this is really, you know, we haven't had a state dinner since 2019. So this is really them showing their friendship and olive branch after the AUKUS deal, after obviously his concerns with trade policies. And also, I think for the Biden administration, it's making sure that they are keeping this Western alliance intact, because it's not just the trade issues that you have these growing concerns amongst European capitals, but it's also the oil price cap. That is going to be a big concern on Monday. That has to be in place, or you will not have Russian oil leaving if it's set to be left on a Maltese, Cypriot, or a Greek ship. And there's a lot of concern there, and they also want to make sure that they have France on board with all of these issues as you have this war still raging in Ukraine.
MH, thank you. Great work. I've still got to expense that meal, so I'm not sure why.
My head's spinning. I'm going to Popeyes around the corner from the Gucci store, and you know, you guys
how did that work out?
It was great. You know, it was nutritious.
You know that when they charge $7 for bread, that you are.
Is that how much the bread was?
Yes, exactly. That's how much the bread was. You might want to check.
MH doesn't eat bread.
Then it must save the bill, I'm sure.
Cheap meal. Just getting the latest from DoorDash. We talked about this briefly yesterday. More cuts coming. They're talking about a reduction of 1,250 positions. The latest headline this morning, Lisa, committed to a reduction in the workforce. Seeing a lot of this through tech, and I think the question we're asking is whether it goes beyond that in the next several months.
Is this the beginning, or is this really a special kind of circumstance with businesses that really built up over the past 10 years, over the past 5 years, in a very different monetary regime at a time when people were willing to get things delivered? Do you both get things delivered as much as you did, say, a year ago?
Sure, yeah. It's getting more expensive, though. I will say that.
It's gotten more expensive.
Have you cut back on delivery?
Yes, I have. Yeah.
Okay.
Because, I mean, if I could just take a walk, I justify it as good exercise, and I take a walk. So
No,
it's fine.
I'm so
But
lazy when it comes to that.
All I could say is I'm not really surveying a representative sample size, but I do think that there are some people who are rationalizing how much it
I don't
costs.
think asking Tom or I anything about that kind of thing is representative.
No, I don't think it is.
I would agree.
To be honest, particularly Tom.
Look,
Right?
I'm looking at
Try
the
to shut that
financial.
over that
DoorDash is publicly traded. I'm looking at the financials here. And, you know, is it a zombie company? I'm not willing to say that. But all of these companies are stressed across every sector, John. And I'm sorry, it's the great zombie roll-up next year.
We're going to keep having this conversation. DoorDash,
Yes.
the latest, but not alone, that's for sure. From New York City, equity futures just about negative, down 0.1%. Massive month of gains again on the S&P in the month of November. Kicking off December with you live. Freya from New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City this morning. Equities up and away over the last couple of months on the S&P 500. Through November, up more than 5%. Through October, up close to 8%. They are big back-to-back monthly gains on the S&P and the first back-to-back monthly gains we've seen on the S&P of the year so far. Outside of that, looking at futures right now, down about 0.1% as we kick off December. Let's look at the bond market, down 44 basis points on a 10-year. Down 44 basis points on a 10-year in the month of November. This morning, basically unchanged, your 10-year 360.71. I want to finish on foreign exchange just briefly. The dollar index down 5% in November. The biggest monthly decline on the US dollar, on a DXY, going back to 2010. Tom, it's been a while.
Yeah, there's two indexes. BBDXY is a much better math, the Bloomberg Dollar Index, and the one that we grew up with is the DXY, which is the major trading partners, not including China. They're both elegant, John, but the Bloomberg Dollar Index screams weaker dollar. The people looking for resiliency in the dollar,
Sure.
I need to hear the story right now.
It's caught people offside in a massive way over the last couple of months. I wanted to pick out one single name, Tom, Credit Suisse. My producer Jamie this morning pointed this out as soon as I walked into the building. Credit Suisse is down for a 13th straight session, down for 13 straight days. And we're down, Tom, this morning by another 3%.
We speak to Global Wall Street, and we don't do rumor, we don't do speculation. I got a headline from their chairman, quote, not a surprise that the share price is lower. The question is the why, and I would suggest, you know, I can't even paraphrase it, but the idea that when one thing goes wrong, there's other things to go wrong as well. And right now the thing going wrong is assets out the door at their so-called wealth management platform. And what are those numbers in a week? What are those numbers in a month? And we've gone from 4 Swiss francs. John, we're under 3. 2.73%. Weighted average cost of capital. You can do it on a terminal, folks. 4.5% equity, 95.5% debt. That's the weight.
It's cutting your way to growth is tough. You know that. We saw this with Deutsche Bank. Holding on to clients in an environment like this one is difficult. This is from UBS at the end of November. UBS said that Credit Suisse clients are coming to the bank proactively. They're the kind of things that you start to read. And Tom, to be honest with you, I remember being surprised when we got to single digits on Credit Suisse. 9 handle, 87654, 2 handle in Swiss trading this morning.
Well, in the U.S., and I'm not knowledgeable on the Swiss, but in the U.S., there's all sorts of institutional and prospectus mandates that if you fall below $5 a share, you got problems.